Now, when I said the trustees, these are the persons that are responsible when it comes to matters decision-making on behalf of the members. So it becomes a great opportunity and a great chance for these members to be able to interact with the trustees as well as interact with the stakeholders. So ultimately, this means it is a chance for them to probably ask questions, get clarification from these persons that make decisions on their behalf. And when I talk about the members, again, for the benefit of our viewers, these are people that are already registered under any of the 3 schemes that I mentioned above. Of course, this includes the individual pension plan, the county pension fund, as well as the local authority pension trust. So this becomes a chance for these members who are already under any of these 3 schemes to interact with their stakeholders as well as their trustees. Now, this becoming the first virtual AGM to be held, it's just because of the adverse effects of COVID-19 and to keep up with the Ministry of Health guidelines to do away with public gatherings and even meeting up in physical places. This is why this meeting is being held virtually. On normal circumstances, on normal times, the meeting is normally held like any other kind of meeting, a physical kind of meeting where they would normally even have over 1,000+ members in a physical space. But then again, to keep up with the MOH guidelines, this is why this meeting is being held virtually. And also, it's again a chance for these members to still be present in as much as, yes, there's COVID-19, and in as much as, yes, they've chosen to hold the meeting virtually, it's also a chance for these members to still be part of the same AGM meeting, which is normally held at least once every year. Again, also for the benefit of our viewers who might be wondering and thinking, if this is a meeting for just to report back to the members on the ongoings and current developments at the CPF, at least over the past 1 year. So for me as an member, as a common Kenyan, where do I get the chance to benefit from all of this? Now, this is where you come in as a Kenyan. There's oftentimes so many questions about retirement, what to do in the event where you get severely, medical conditions that renders you sometimes not even being able to be active and proactive as it was. Sometimes you get laid off by your employer. So this is where you come in as a Kenyan, as a common mwananchi there, or even as an member. But just following through this meeting until the very end, you'll be able to get a chance to know and understand how you can be able to be part of any of the 3 schemes that I mentioned above, how you can be able to follow the right protocols and guidelines that are going to enable you to know which one of them you can choose to start saving up, so that at least in the event of retirement, you can be able to benefit and you can be able to secure yourself and still continue to live a fruitful life even after retirement. Again, there's also that plan, the individual pension plan, which caters for every Kenyan, cut across. If you are in the informal, in the informal sector, if you are self-employed, this is one of those plans that caters for you and every other Kenyan, and you can be able to save as little as 500 bob a month and still be able to be guaranteed a secure and safe retirement in the event of your retirement. And also, just to recap, when it comes to the county pension fund, that caters also for the county government employees. But again, there's also a chance for you as a Kenyan there to still be part of this proceedings and get to know which one benefits you and which one you'll get to choose, so that at least when in the event of any of these circumstances happens to you as a Kenyan, then at least you also stand a chance and get a chance to benefit from that. Also, they'll be running live their numbers at the bottom end of the screen, just to be able to know how you can be part of this conversation even as a Kenyan out there. You can be able to ask questions as it pertains to pensions, questions as it pertains to retirement, and also questions as it pertains to saving, and also be able to be guided and taught how you can be able to be part of any of the schemes that I also mentioned above. So ultimately, this means that yes, it is a chance for both members and non-members to stand a chance to benefit from these pensions and also benefit from the retirement scheme. Okay, I think now the voice is okay.
It's good. They should be able to tell us now.
Now we are good to go.
Good. You know so much about us already.
Yeah, you have to read.
you know so much, Dory.
Yeah, thank you so much.
I love that.
Thank you. Thank you. You have to read and know what you're doing.
Thank you. Thank you, really. Thank you.
And I love the way you told me about the last time about the IVP thing.
Yes.
You said that I just wrote.
Yeah. People.
You know that catches a common Kenyan.
Yes.
Because nikisema tu niamini.
Tumia simu. Usiende kwa ofisi ya mtu. Ingia tu ofisi yako na simu yako.
So they are still getting ready before we start with the CEO.
Actually, you need to hold and say. But unataka kwa
In
member.
fact, I'll do that, by the way.
Yeah,
I will.
unataka kwa member. Hebu tuende na wewe. Star
289 hash.
Na utume na itakwambia
Kila kitu itakuwa hapo sasa.
na itakupatia ID number yako na your system is connected to IPRS.
Oh.
Yeah. So inakupatia ID inasema wewe ni fulani to confirm that you are not a robot.
Yeah, actually.
Then it tells you just wait time you're next of kin and then put your
Everything at the comfort of your phone.
ukishamaliza actually you need to test so that you can be sure. So after you finish tells you
Let's finish this interview and then I test.
pay bill number. Napata pay bill number.
Then you start.
Tuma, you send 500 shillings and that's yakuchibira kwambia. When you check your statement,
From there again.
from the system it will tell you,
Things are going digital.
You are a member of M pension and you are the money you have.
Nirudie tena. Well, good morning to you, coming to you live from CPF House here in Nairobi, where the 17th annual general meeting for the County Pension Fund Group schemes is set to take place. This schemes under the County Pension Fund Group schemes, of course, include the Local Authority Pension Trust, there's the County Pension Fund itself, as well as the Individual Pension Plan. And one interesting thing about this Individual Pension Plan is that it caters for all Kenyans. It cuts across. So whether employed, self-employed, or even in the informal sector, it caters for you. And also one interesting thing is that you can be able to save as little as 500 bob a month and still you secure yourself a good life, a better life. This is after retirement or even in the event of a layoff by your employer, and also in the event of severe and bad medical conditions, which sometimes may render you not active and not as proactive as you may be. So this is again one of those advantages, at least when you get under any of these schemes when it comes to saving. So this meeting is being held virtually. It is the first virtual AGM meeting to be held, and this is obviously due to the adverse effects of COVID-19. Just keeping up with the Ministry of Health guidelines to avoid gathering physically in public spaces, and this is why this meeting is being held virtually. So we're about to start. Asante sana na utaniwia radhi niruhusu nizungumze katika lugha ya Kiingereza. Right, good morning to you, coming to you live from CPF House here in Nairobi, where the 17th annual general meeting for the County Pension Fund group schemes is set to take place. Now, these group schemes are inclusive of the Local Authority Pension Trust, or if you may, the LAP Trust. This is the oldest of them all, of all of the schemes. There's also the County Pension Fund itself, as well as the individual pension plan. Now, these meetings are normally held annually, at least once every year, and it's a time for the CPF to just report back to the members on the ongoings and the current developments at the County Pension Fund. And also, it's the first of its kind to be held virtually, so that makes it the first virtual AGM meeting. And now joining me live this morning is the group CEO, that is Bwana Hosea Kilu. Thank you very much, sir, for making time this morning.
Thank you very much, Doreen.
All right. Now, this being the first virtual AGM meeting, what necessitated that?
This is necessitated by the COVID-19 challenges.
Okay.
While at the same time, we are a very well-governed organization, and we want to obey all the laws and regulations given to us by our regulator. And therefore, we felt that we must have the AGM for the members.
Okay. So it was still important to have the AGM in as much as there's the adverse effects of COVID-19.
Indeed. And the reason why, therefore, we chose to go to this methodology of doing it, which is virtual. And I think, as you have said, it is the first scheme in Kenya, or anywhere else in the world, I believe, to hold their first AGM virtually. And also, on top of that, to also have it live on national TV.
All right, which is a good thing, and also at least it ensures that all members and even non-members can be able to be part of the meeting.
Absolutely.
All right. Now, how can you rate the performance, at least over the past 5 years of the CPF?
CPF group of schemes have actually had steady progress and growth for the last 5 years. In fact, we call it exponential. For example, although our oldest pension scheme, LAP Trust, which was established way back in 1929, is actually close to new members. In other words, since 2012, no new members can join. We still find the fund value of this scheme still growing. And last year, it was at the level of 31 billion in terms of real assets. And this year, we're actually going to report to the members that the scheme grew to 33 billion in terms of real assets. Although we do have some huge unremitted contributions for this particular scheme, which the local authorities still hold these particular members, and this is more than 24 billion. So if we combine 33 billion, which is real assets we are keeping, plus 23 billion, you can see that this is one of the largest pension schemes. And when you come to County Pension Fund, it started in 2013 with one single member and the first county to join as an employer and the water companies. Right now, it is the largest pension scheme in terms of size of members, because from that single member...
That is the County Pension Fund?
County Pension Fund. It is a new defined contribution scheme, which is now growing faster. And now we are reporting this year that it has grown to over 51,000 members. And then we have the individual pension plan. We normally like to call it M-Pension, which is actually available to every Kenyan, irrespective of your status in society. In fact, every Kenyan should be proud to be a member of this well-managed scheme, because we have inside here people as high as governors contributing voluntarily, our legislators in the county governments, and also we have very common people in the streets who join by dialing their mobile phones, and they don't need to visit any office, any of our offices to be members. This one has grown from, again, single member in 2015 to where we are now, where we have more than 16,000 members, and we have grown for us from zero fund value that time, and now this year we are reporting over 2 billion in assets for this individual pension fund. And it is growing because it is a mobile-based scheme.
Now, Bonasi, or at least you've explained to us both of the three schemes under the CPF group scheme. But that's a question that a common Kenyan would ask. For instance, I'm probably in the informal sector, or I'm self-employed. Which one can I choose, or which one best suits me?
The one we advocate for Kenyans who are not employed by anybody in the informal sector, and even in the formal sector, because you can do it as an additional voluntary contribution, is the CPF M-Pension. It is one of the few mobile-based schemes where you join by simply dialing *289# on your Safaricom line, and you follow the prompts, and the menu there will allow you to make savings anytime you have some money in your wallet.
Okay.
Thank you.
All right. And finally, as you bring it to a close, Bonasi, what is your general feel of this event this morning?
We are very excited. I think it's an extremely exciting day for us. Although we are sitting with just a few of us here, within the number allowed by the Ministry of Health. But we know out there are more than even possibly 3 or 4 million Kenyans who are watching this national TV station, which we are very happy to partner with, KBC. And our members, although our members are only 80,000, but we are still asking our members to not only watch as we make the presentation of the annual general meeting, but also link up with us using the channels which have been provided, and I think they are streaming on the screen if I'm not wrong, so that they can still join us now to be able to ask questions, send their comments, give us congratulatory messages, because we can do with that also.
All right, thank you very much, sir. All right, that has been the Bwana CEO himself, that is Jose Akili, the group CEO at the County Pension Fund. Of course, we'll continue to give you more details, and even just give you a bit of a background of this CPF, as well as more about its group schemes. But for now, so I want to take it over to our MC of the day to carry us through the day's program here at the CPF House in Nairobi. Mr. Kimei, over to you.
Thank you very much, Doreen. Thank you also, the group CEO and MD, Mr. Jose Akili. Distinguished guests, ladies and gentlemen, welcome to the CPF 2020 Annual General Meeting. Chief guests and Chairperson, Council of Governors, Honorable Wycliffe Oparanya, Chairman, Board of Trustees, Group Chairman, CPF, who is also around with us here today, CPF MD and CEO, board members, and members, wherever you are, wherever you are watching. I believe in the 47 counties, you are busy following these proceedings here at CPF House. I want to appreciate, first of all, the crew that are here. But before we go on, we have our national prayer to pray for this country, and at the same time, Kama Wazalendo, I would ask you and request everyone, as we begin the meeting, to rise up for our national anthem. Our studio are getting ready, and the East African anthem. Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike, umoja wetu ni nguzo yetu, idumu jumuiya yetu. Thank you very much. May you now be seated, ladies and gentlemen, our guests. And conforming with the government directive, and at the same time from the Ministry of Health, we are here observing social distance. And before we go on, we would also have to get directive also. We have one of the officers who is here from the public health will guide us on in case some of us we may miss a point. We have to be guided on the issues of social distance. Of course, we've been sanitizing up there. We all have the masks, but we will be taken through the rules and regulations that govern such a meeting in case some of us would probably miss the point. But let me have the lady, first of all, to sanitize the microphone around here, including the podium, and then we will have the officer from public health to take us through. Please welcome, Gabela.
Group CEO, the Board of Trustees, all protocols observed. My name is Margaret Martin. I'm a public health officer, Nairobi County Government. And first and foremost, I want to appreciate the planners of the event for having involved the key stakeholders in the meeting. We were called upon when they were arranging, and we were invited to come and give the guidelines on how we are going to go about the meetings. And we engaged in the arrangement of the hall. This is in agreement with the current MOH guidelines during the COVID-19 pandemic, and I can confirm basically what we did yesterday and what is on the ground right now is what is supposed to be there. We have confirmed the sanitization process is there. I've confirmed the sitting guidelines is there, and I believe everybody else in the meeting is aware of the guidelines, and we will continue to observe the guidelines until the meeting is over. So I agree with everything, and I agree and I approve the meeting can go on. Thank you.
Thank you very much. I think we've been taken through now the rules and the guidelines, and we've been given a go-ahead. Now, ladies and gentlemen, we want to officially begin the meeting, and I want to request the chairperson, CPF, Financial Services, just to give us the welcoming remarks, and at the same time, welcome everybody for this AGM meeting. Please, the chair, Dr. Julius Kimngetich. Karibu.
Okay, well done. I think our system now is sanitized. Good morning, members of CPF schemes, which include the individual pension plan, the DC scheme, and the DB scheme. We are here today to celebrate the AGM. An AGM is basically a report card to the owners of a business. And this is no different. The AGM for today is about a report card to the members. It's a bit unusual that this has to happen, but all of you know the circumstances under which we are having this AGM. We are in the middle of a pandemic. This pandemic is affecting everybody in the entire world, and so therefore most of you probably will not see my face. I have chosen to make sure that I wear my mask as an example to all of you, so that then you keep on wearing your mask at all times when you are in a public place, or when you are in circumstances that you go nearer to people you are not often familiar with, or you don't meet quite often. I would like to urge all Kenyans to be doing the same. And since I have a public forum like this, I want just to emphasize 3 things about this pandemic. What we know so far. Remember, it's a new disease. It is barely 6 months old, and so therefore we keep learning. One, of course, is always wear your mask when you're in a public place, and please make sure that you keep it there. Okay? The purpose of a mask is so that then in the event somebody sneezes, the droplets which carries the virus at least are absorbed by the mask before they reach either your nose, your mouth, or your eyes. Okay? Unfortunately, we don't have a mask for the eyes yet, but so I'm sure the scientists are looking at it. The second one is please wash your hands. It's important as members that you keep washing your hands at every opportunity. In the event that you are not able to access water, always sanitize. It's important for every member and all Kenyans in general. Please keep this disease at bay so that then the purpose of sanitizing with an alcohol-based sanitizer is that it kills the virus. So please sanitize, or when you wash your hands with soap thoroughly, the virus also disappears. So protect your family, protect your neighbors, protect your friends by ensuring that you always sanitize or wash your hands. The third message I want to give you about this virus is for those who are in isolation or quarantine, please just stick to it. I know sometimes 14 days can be, those who have gone to isolation, 14 days can be a challenge. But we want to make sure that, please ensure that you obey this. Because if you do all these things, then you are protecting the country, you are protecting yourself, you are protecting your family. The final thing I'll mention is the importance of saving. We are here to celebrate 90 years of saving. We want all Kenyans, especially more so the members of these schemes, to continue saving. Our savings rate as a country is still low. If you look at the current statistic from the Central Bank, we are doing roughly around 10% of our national income as saving. I would like to urge more of you to continue saving. I know it can be a challenge in these circumstances to allocate some more money to saving, but what is a saving? A saving is postponed consumption. If we just postpone a little, we then protect ourselves in later ages, and then also we enable the country to progress. A lot of the savings that we have on your behalf are invested in government instruments, and then government uses these things for national development. So please continue saving because you protect your country and also protect yourself. Finally, I would like to thank the trustees led by Dr. Kwedo for a good job. They have protected your funds. I would like also to thank the board of the administrator, CPF, and then also the management led by Kili for a good job. We have a good report for you members, and so therefore I wish to say thank you very much to all these partners for doing a good job. I would like also to thank all the other partners, the auditors, for making sure that they oversee and make sure that they report to the members that things have been done well. The custodians, the fund managers, all of you are our partners and you have done your job as is required. I would like also to thank the counties themselves for remitting the money on time. Some of the counties have challenges, but they are all working to make sure that the pension contributions are well remitted and ensuring that that happens. The water companies too, and all the individuals in the individual pension plan. The 80,000 of you, I would like to wish you a happy AGM. As we said, it's an unusual AGM, but there has been a lot of innovation. The public health have approved this, and so, luckily the technology also exists for this to happen. So this is the new normal, our members, and we wish you well. Most probably even post-corona, this will be the new normal. So thank you very much and have a great AGM. Asante sana.
Let's give a round of applause to the chairman. Thank you very much, Chairperson. Many a times we also want to thank you, because you can't thank yourself. We also want to thank you for the unique expertise that you put into the leadership of the CPF in the group, and also the trust that the members have on you. Thank you very much, Chair. Now it's my duty and pleasure to welcome the Company Secretary, Bwana Isaac Mitei, to give us a reading of the notice of the meetings, and then proceed again for the approval of the minutes and the previous annual general meeting. So I want to welcome the Company Secretary. Karibu sana. Let's give a round of applause to mkaribisha kabisa. Asante sana. Thank you very much. Welcome.
The Chairman, Board of Trustees, the Chief Guest, who is also the Chairman of the Council of Governance, Bwana Wycliffe Oparanya, the Chairman of the group companies, Bwana Dr. Kim Ngetich, the Group Managing Director, Bwana Jose Akili, the representatives of the Corporate Trustee, Bwana Timothy Wamboi, all the board members, distinguished guests, members of the scheme, welcome to this AGM. We are going to read the notices for the 3 schemes that already we have been informed today. The first notice that I'm going to read is the one for the defined benefit scheme, that is LAP Trust. If you are keen, 21 days ago, these notices were published under our local daily newspapers. I'm therefore going to read the first notice. Notice is hereby given that the annual general meeting of the local authorities pension trust will take place virtually on Zoom and CPF social media pages, and will be streamed live on KBC TV Friday 26th of June, which is today, from 10 a.m. to 1 a.m. The agenda of the meeting, ladies and gentlemen, will be 1. Introduction and opening remarks. 2. Reading of the notice of the meeting. 3. Reading and taking note of the minutes of the annual general meeting held on 27th of June 2019. 4. Presentation of the investment manager's report. 5. Presentation of the scheme's custodian report. 6. Presentation by the scheme actuary. 7. Presentation of the financial statement and audited accounts for the year 2019. 8. Presentation of the administrator's report. 9. Presentation of the chairman's report. 10. Remarks by the chief guest. 11. Award and recognition. 12. Questions and answers. 13. Presentation by the stakeholders of the scheme. And finally, vote of thanks. The next notice will be the one for County Pension Fund, our DC scheme. Notice is hereby given that the annual general meeting of the County Pension Fund will take place virtually on Zoom and CPF social media pages, and will be streamed live on KBC TV on Friday 26 June 2020, which is today at 10 a.m. to 1 p.m. The agenda will be 1. Introduction and opening remarks. 2. Reading of the notice of the meeting. 3. Reading and taking note of the minutes of the annual general meeting held on 27th of June 2019. 4. Presentation of the investment manager's report. 5. Presentation of the scheme's custodian report. 6. Presentation of the financial statement and audited accounts for the year 2019. 7. Presentation of the administrator's report. 8. Presentation of the corporate trustee's report. 9. Remarks by the chief guest. 10. Awards and recognition. 11, question and answers. 12, presentation by the stakeholders of the scheme. And finally, the vote of thanks. The next notice, ladies and gentlemen, is the one for the members of the scheme for the individual pension scheme. I'm going to read as it were. Notice is hereby given that the annual general meeting of the AGM of the individual pension scheme will take place virtually on Zoom and CPF social media pages and will be streamed live on KBC TV on Friday, 26th June 2020 from 10 a.m. to 1 p.m. The agenda again will be 1, introduction and opening remarks. 2, reading of the minutes of the meeting. 3, reading and taking note of the minutes of the annual general meeting held on 27th of June 2019. 4, presentation of the investment manager's report. 5, presentation of the scheme's custodian report. 6, presentation of the financial statement and audited accounts for the year 2019. 7, presentation of the administrator's report. 8, presentation of the corporate trustee's report. 9, remarks by the chief guest. 10, awards and recognition. 11, question and answers. 12, presentation by stakeholders of the scheme. And finally, vote of thanks. Ladies and gentlemen, I now go to agenda number 3, where we are supposed to read the minutes for the last meeting, which took place on 27th of June, the year 2019. Ladies and gentlemen, if you check on our website, that is cpf.or.ke, you'll get the minutes actually uploaded there, and you can be able to go through with me. I'll actually take the minutes as read, but for purposes of those who are listening to us, I'm going to only highlight some few areas what the minutes have captured. The first one is the one for defined benefit scheme, that is on the 16th annual general meeting of the local authorities pension lab trust, a DB scheme which was held in Pride Inn, Paradise Resort, Mombasa, on Thursday, 27th of June, 2019. The first few pages, ladies and gentlemen, actually the first and second shows the attendance. Minute number 1 was about introduction and opening remarks. Minute number 2 was about the keynote address by the chief guest of that time, that is Hon CS Eugene Wamalwa. The third, minute number 3, was reading of the notice of the 16th annual general meeting. The fourth minute was about the reading and approval of the minutes of the 15th AGM. The fifth minute was about presentation of the trustees' report. Actually, details have been captured well if you go through all those minutes. And ladies and gentlemen, even the, that is minute number 8, presentation of the custody report, and also all the stakeholders actually who made presentation that day, or everything is captured. And with that, ladies and gentlemen, I would request for a proposer and a seconder of the minutes for the DB scheme. May I have a proposer, please? A proposer, please. Ladies and gentlemen, I'm informed by our technical team that one Susan Mutemi has made a proposal. A seconder, please.
Charles McKinney from Nairobi City Water and Sewerage Company, defined benefit member number 7794. I second.
Thank you, Charles. Fellow members, the next minute is the one for the defined contribution scheme, that is the county pension scheme. Again, the minutes were captured as per the proceedings of the day, and I believe from minute number 1, if you are going through with me, to minute number 14, let me confirm, minute number 13 were captured as per the proceedings of the day. I therefore request that we have a proposer and a seconder of those minutes.
Greetings, my name is Jennifer Munyori. I work with Mombasa Water. My membership number is DC 145-792, and I wish to propose the minutes. Thank you.
Thank you, member. May I have a seconder?
My name is Josfrida Ngoa from Kilifi County, DC member, ID number 244-28792. I second.
Thank you, member. The other minutes, ladies and gentlemen, is the one for the individual pension scheme. And again, they took place the same day with that one of the defined benefit and also the defined contribution scheme. I therefore, for purposes of time, request that again these minutes be taken as read, and we have a proposer and a seconder of the same. May I have a proposer, please?
I, Mohammed Shale Suleiman, CPF member from Garissa County, ID number 0032213, I propose.
Thank you, Mohammed. Thank you, Mohammed. May I have a seconder?
My name is Gloria Terer, member number 6473. I second these minutes.
Thank you, Gloria. Ladies and gentlemen, that brings to the end the reading of the notice and also the minutes for this meeting. I thank you so much.
Thank you so much. Thank you, Company Secretary. Let's give a round of applause to the Company Secretary. Thank you so much for the proper coordination of the proposers and seconders of the minutes. And we want to appreciate, thank you for that organized manner of which we've gotten from those counties that are far away from here. Now, ladies and gentlemen, we are heading again to the other item, and that is presentation of the investment manager's report. And we will have from the defined benefits, we have manager's report from our representative from ICA Lion, that is Easton Kihanda. Believe we, Easton, please. Just 1 minute as we sanitize this place, then you will present. And thank you very much for also observing the social distance. The team that is here, thank you. Now welcome.
Thank you very much, distinguished guests, ladies and gentlemen. My name is Einstein Kihanda from ICA Lion Asset Management, and I'll be giving the report on behalf of the fund managers for the DB scheme for the year 2019. My presentation will cover the role of the fund manager. I'll also give a report on the macroeconomic environment that was prevailing in 2019. I'll talk about a summary. I'll give a summary of the fund, and I'll also give an outlook for 2019. The three fund managers who are managing the DB scheme in 2019 were Britam, ICA Lion Asset Management, and Stanlib, and therefore I am giving the report on their behalf. Starting off with the role of the fund managers, one is that we work in terms of selecting the securities that we invest on behalf of the investors, so that we are able to generate an appropriate investment return, an optimal investment return. The scheme also has an investment policy statement that has been designed to meet the investment objectives. So the role of the fund managers is to implement that investment policy statement. We also ensure that the funds are fully compliant with the guidelines that have been issued by the regulator. The fourth thing that we do is to report to the trustees on a quarterly basis about the status of the fund, the actions that have been taken, and also the outlook for the following quarter. And finally, like we are doing today, we also present the fund report during the annual members meeting. So those are the roles that we play as the fund managers. So let's start with the economic environment that was prevailing. And the reason why this is important is because the investment returns that we generate are determined by what was prevailing in the investment environment in the year. If we look at where we were in 2019, the return was 5.7%, which was a drop from the previous year of 6.3%. Generally, there was a slowdown in the economy across all the sectors in 2019 compared to 2018. Particularly in the agricultural sector, there was a slowdown because of lower production of various crops and also a decrease in exports, like in vegetables and fruits. Finally, in terms of the performance, the projection initially, this was before the pandemic, it was expected that in 2020 the growth will be at about 6% for the economy. However, we are aware that as a result of the COVID-19 pandemic, we expect that the economic performance will be lower, and in fact, both the IMF and the CBK have revised their expectations for the economic growth downwards to between 2.3% for the central bank and the IMF at 1%. If we look at some of the key factors in the economy in 2019, inflation was generally moderate, and in fact, it even dropped to 3.8% in September. It is expected that the inflation will be within the target of between 2.5 and 7.5% for this year. Interest rates, last year, the central bank lowered the central bank rate after repealing the interest rate capping, and the decision by the Monetary Policy Committee was informed by the need to support economic activity, and it also came against the backdrop of a drop in inflation. Because of the increased demand for government securities during that period, we saw the treasury bills dropping compared to the previous year, and in fact for 2019, interest rates closed lower than they were in 2018. If we move to the other aspect of the economy, and that is on the interest rates, on the currency. The currency in 2019 was stable, generally stable. There was lower demand for imports, and there was also improved tourism proceeds and also agriculture. We also saw an increase in remittances from the diaspora and various actions by the central bank. During the year 2019, the shilling strengthened by about 0.5% against the dollar. But in 2020, we expect, we have already seen a weakening of the shilling as investors have a flight to the dollar. So we have seen a weakening already. In the equity market, following the repeal of interest rates in the third quarter of 2019, we saw equities rally across all the sectors, and that saw the prices going up. However, in 2020, we have seen a reversal in that upward trend as a result of the uncertainty that has arisen as a result of the COVID-19 pandemic. But we still expect that several of the blue chip companies will still remain fundamentally strong, and that there are opportunities for accumulation. Moving on to property, as you're aware, your scheme has invested in property. And what happened in the 2019 is that following the repeal of the interest rate capping law, we expected that this would be a catalyst for improved activity in the real estate market. However, again, as a result of the outbreak of COVID-19 in the first quarter of 2020, we have seen that recovery will be pushed further away. You can imagine in terms of the increase in losses of jobs and reduction in wages, all these are factors that will affect the demand for property. Furthermore, in addition to all this, there are various measures that have been implemented by the government to contain the pandemic, and this will result in delays in obtaining approval for construction, commencement of construction, and we also expect that projects will take a bit longer to achieve full occupancy because the incomes will remain under pressure. So let's move now into the details of the scheme in terms of the investments. In 2019, in terms of investment income, we had an increase. In 2018, we had an investment income of 1.85 billion. This increased to 2.1 billion in 2019, which was quite a good improvement. We also had a revaluation gain of 1.8 billion in the investments that the fund has, compared to a revaluation loss of 430 million the previous year, which again was an improvement. So in total, the investment return increased from 1.42 billion in 2018 to 3.9 billion in 2019, which is a significant improvement and confirms what the chairman said in terms of the good report for the scheme. If we look at where the assets are distributed across the portfolios, generally the value of the assets under management in 2018 were at 29.4 billion. These have increased to 31.4 billion. And in terms of the allocation, the biggest weighting we have is in property, followed by government securities, and then listed equities. So the total assets of the scheme increased from 30.4 billion in 2018 to 33.1 billion in 2019. What are our expectations in terms of the outlook going forward? One, in terms of the economic growth, I think I've already given you a snapshot that we expect there will be lower economic growth in 2020 because of the impact of COVID-19. We also expect that in terms of our currency, it will be weaker in 2020 because of flights, investor flight to safety of dollars, and also lower remittances from the diaspora because of our Kenyans employed abroad. We expect that they'll remit, there'll be a reduction in the money they remit to our country. However, in terms of inflation, we expect that inflation will remain within target because we have a much lower import bill in terms of oil. As you have seen, petrol prices have gone down because the international crude oil prices have reduced. And we also expect the prices of food items to be stable. Interest rates may experience some upward pressure on the longer term bonds because investors may demand higher returns because of this uncertainty. On shares, that is equities, we expect some volatility as listed companies adjust in order to cope with the pandemic. And finally, on property, we expect a slow recovery in 2020 as a result of the pandemic. Chair, I think that concludes my report for the DB scheme, and at some point in time later on, we'll be available to take questions. Thank you very much.
Thank you very much, Esther Kihanda, again from ICA and from DB scheme. Thank you. So, ladies and gentlemen, we'll move straight to the other item, and that is a presentation of manager's report from CPF, particularly from IPP, Individual Pension Plan. And I want to take this opportunity to say that we are getting also the reports, and our honorable members are getting reports from their screens, wherever they are, so they'll be able to follow. And I want to ask you also, members who are watching live, you get a pen and get a paper, so that we will also take questions and you'll have answers at the end of the presentation and at the end of the function today. So I want to request Nicholas, please, karibu sana. Welcome and give us the manager's report. But before that, I believe also we'll do as a norm, sanitize the podium. Thank you. You are welcome.
The chief guest and also chairman of the Council of Governors, Mr. Wycliffe Oparanya, Group Chairman of CPF Financial Services, Dr. Kipngetich, Group Managing Director, CPF Financial Services, Bwana Jose Akili, Chairman of the DC Fund and the IPP, Representative Mr. Timothy Wambui, Board of Trustees, scheme members, ladies and gentlemen, good morning. So I have today the distinct privilege and honor of representing the investment report for the DC Fund and the IPP. Again, my name is Nicholas Ithondeka. I'm the CEO of Trust Investment Services. This report I present on behalf of our firm, Trust Investment Services, and Sanlam Investment East Africa, who are the fund managers in office in 2019. So members, I'm going to fairly skip through the economic highlights, as was quite ably presented by the CEO of ILAM, Mr. Einstein Kehanda, on the DB Fund, and I'll jump through and just present a few pointers, but largely the economy remained, as Einstein represented, a much better year compared to 2018, but again, going forward in 2020, of course, a few challenges and a few balancing act that we have to maintain as fund managers. So the Kenyan economy did well in 2019, as was quite ably presented. Again, for us, the key issue is just good weather. If there's good rainfall, then you're able to see most of the parameters in the sector are able to perform. Agriculture, which still remains our bread and breakfast in terms of GDP, did quite well, about 6.9% last year. And of course, now going forward, we do expect a few challenges, especially when it comes to the other sectors that are great impact in 2020. In terms of inflation, well contained in 2019. In terms of currency, again, we had the Kenya shilling appreciate again in the USD by about 0.5%, which again meant quite well for the investment markets, which I'll be talking about as we move forward. So the scheme is largely presented in terms of government securities and equity markets, and as the scheme expands, and was earlier highlighted by the Group Managing Director, Mr. Kili, we have had substantial growth of the scheme in 2019, and I'll talk about those numbers in a few minutes. But in terms of the straight markets, we did have equity markets doing quite well. Last year, we did see levels of about 19% growth on the major indices, which is Nairobi All Share Index. Bond markets as well, we had interest rates go lower, as Kehanda presented, which meant good news for the scheme in terms of the bond valuation that we were able to show by the time we closed the year, and the return which were able to be presented. Again, we had quite a good number. So I'll jump into the scheme specifics, especially I'll start with the DC Fund, which is now the County Pension Fund, DC Fund. As earlier mentioned, it had substantial growth. By law, we are required to maintain the investments of the funds in particular assets as per the Retirement Benefits Authority, and I'm happy to confirm that we were compliant and we were able to represent the scheme as stipulated by law under the RBA Act, and also under the investment policy statement, which dictates what we can invest in and what we cannot touch. So in terms of scheme allocation, we had about 65% on government securities, which is mainly bonds and treasury bills. We also had about 20% on equity markets, which is now slightly aggressive investment. And we also had fixed deposits about 8%, bringing the total fund value to about 12.1 billion. If you look at the previous year, in terms of proportion, you'll see it largely didn't change. But however, the scheme did record a significant jump in fund value, as was earlier highlighted by Mr. Kili. We did have the fund value move all the way from 6.8 billion to about 12.1 billion. And again, this is on the backdrop of very good growth in terms of investment income. And additionally, what Kili mentioned there is a members' contribution and the number of members who've come on board on this scheme. On the SALI compliant fund, or what we call Sharia compliant fund, again, similar growth in 2019, about 80% growth in the fund value, which is about just below 1 billion in 2018. By the time we closed the year, we were at about 1.8 billion. Again, just giving the story of the growth that we've had, even on the Sharia compliant fund. In the asset allocation, as earlier mentioned, we have requirements by RBA and by investment policy statement. So we were largely in line with what is expected, and we did have 20% in equity markets. We had about 65% in government bonds. And as you'd see, as we move forward, you'll be able to see us step into more riskier markets. And of course, given how the times are operating, is a well-balanced and calculated move to try and jump into what is largely cheaper assets now as we move forward. Moving back in terms of history, you see the growth of the fund has been fairly positive. In 2017 to 2018, a growth of about 40%. In 2019, compared to 2018, again another jump of about 70%. If we move to the growth of the fund, of the Sharia compliant fund as well, similar growth, which we are quite happy to report as fund managers. I'll jump through to the IPP fund and just fairly go through the numbers in terms of the performance. Again, members, similar growth here. We did have a jump all the way from about 1 billion to about, actually 926 million to about 2.015 billion, which is a 117% growth in the fund. The distribution of assets still remains fairly the same. Government securities is about 66%. Again, the stability of that you'll appreciate, especially in years like this year of 2020. We are still able to reflect the income. Historically, you'll see the jumps in 2017, 2018, 43% growth in this fund. Again, in 2019, 117% growth in this fund. So, ladies and gentlemen, members, we are happy to represent 2019 numbers which have been very positive. In 2020, as Ken has talked about, there's a very delicate balance of what we are going to invest into. Of course, a bit of slowdown of the markets. And again, for us in 2020, the principle moves to preservation of capital and as marginal growth as possible, as you can manage, given the circumstances we find ourselves in. But all said and done, the scheme continues to grow, especially in terms of membership contribution, which is supportive to investment return. And on behalf of Sanlam Investments, East Africa, and ourselves, Corp Trust Investment Services, we'd like to thank the board and the members as well for having given us the support to be able to continue growing the fund. And later on, as Kehanda mentioned, there's an opportunity for question and answer, and we're happy to take them at that point. Thank you so much.
Thank you. A round of applause. Let's appreciate Nicholas Ithondeka. Thank you very much, Nicholas Ithondeka. Thank you so much for your presentation. That was a presentation of County Pension Fund and IPP Investment Managers Report. For our viewers, ladies and gentlemen, we are at CPF Annual General Meeting 2020. And if you're joining us now, please stay with us until the end of this so that you will learn. And this is for the fulfilling lives, investment for the future, and at the same time, securing our future. So I want to also request the presenters, if you are here, we have the presentation pen here, so you can use it. It's yours. So we'll also sanitize it because I've already held it. And I want to request you to use it. Now, ladies and gentlemen, we will go to the other item, and that is a presentation of Lab Trust DB, Defined Benefit Custodian Report. And I want to request Gideon Choka, who is here with us. Gideon Choka, please be up on stage so that you give us a presentation of Lab Trust Defined Benefit Custodians Report today here. I want to request once more our lady to sanitize. Please, you can also sanitize the presentation pen here. Karibu sana. Thank you. Please welcome.
The chief guest, the Chairman, Council of Governors, His Excellency, Honorable Wycliffe Oparanya, the Chairman of CPF Financial Services, Dr. Kip Getich, the Group CEO, Mr. Jose Akili, the Trustee of the CPF scheme, our regulator represented by Caroline, the management, esteemed and distinguished guests, esteemed members, good morning. My name is Gideon Choka. I represent Standard Chartered in this function. I head the security services business, but for this morning, I am here on this platform to represent the custodians of the defined benefit scheme that Standard Chartered Bank, KCB Bank, and also Equity Bank, who are the joint custodians for the DB scheme. We'll take you through our role as custodians, what we do for you, and we will also take the opportunity to confirm what we were holding as at the end of the period under review. What's our primary role as custodians? We have three key responsibilities of the fund. The first obligation that we have is to make sure that the assets are safe. And that involves taking care of the assets that the fund manager has invested in and taking care of the afterlife of the investment. What happens after the fund manager has invested? There's a lot of activity that we call it, lump it together and call it asset servicing. That means collecting income, collecting any benefit that is announced for the scheme, like bonus shares, collecting interest payments also from the government, deposits, and corporate debt, and even we work with the management for the collection of rental income. It's an onerous responsibility that really keeps us busy throughout. The role of the fund manager is to optimize the return on investment. They do their best for the fund. So when they wake up for each and every business day, their role is to look for opportunities where the funds that you as members, as team members, are saving for the future are invested properly in secure investments, and they want to optimize the returns that you will get from this investment. This model where the fund manager has a specific responsibility and the custodian has a specific responsibility and the management of the fund also have a specific responsibility, it's really wise and is supervised by our regulator. It's a model that works very well and it allows for transparency. The fund manager reports what they hold, the custodian also reports what they are holding in their books, and the auditor comes and checks that indeed everybody is sticking to their lane as guided by the regulations and supervised by RBA. It reduces risk where no one person or provider can come and stand before you and tell you we are holding 33 billion. It's all checked. There are various checks and balances. It also adds value because everybody sticks to their lane. So if you're a fund manager, you know you have to optimize the investments. If you're a custodian, you're involved in the investment administration. And the administrator, which is managed by CPF, deals with you as members. This model works well and is indeed been copied by several countries who are to copy the model that we have in Kenya, seeing that it's very successful. On this slide, we just summarize the many responsibilities that we do. There's the safekeeping. We settle the transactions in the name of the fund. We register the securities in the name of the fund, and this is what the auditor confirms. We collect the income. We monitor all the announcements that are made for the benefit of the fund. We also represent the interest of the fund in AGMs. We facilitate foreign exchange where they're investing outside the country, and we are involved in activity reporting, which is quarterly, and this is also checked by the auditor. What is required of us, our obligation? I confirm that all the three custodians for this fund have the statutory licenses that are given annually by the three primary regulators. There's the banking regulator, Central Bank. Then there is our primary regulator for this, for the pension funds industry, that's RBA, and the capital markets authorities allows us to hold the assets. So the fact that these are done every year and that they are checked and only given if you're fit for purpose can give you comfort that those who are handling your funds are licensed to do that. On this slide, we explain to you the model that we've adopted collectively to ensure that your assets are safe. We register the assets in your name. We hold them at arm's length. They are not part of the 3 assets of the 3 banks, Standard Chartered, KCB, and Equity Bank. So that model allows us to ensure that we hold documents, agreements, which identify the trustees as the owners of the assets, and we are holding them on your behalf. And we work very closely with the fund managers to make sure that the assets are safe. The last part of this presentation is to confirm the assets that you are holding as at the period under review. The fund managers have given this report, and now we are, as custodians, are giving independent reports. In total, we were holding 31.4 billion, and most of the assets, as highlighted, were by the asset class in property, followed by government securities, then equities follow, then the rest are as outlined. We also want to take this opportunity to show you just some of the properties very briefly in less than a minute. The pension towers, the CPF house valued at 922 million, the Metro Park 650 million, Freedom Heights 1.8 billion, Eldoret Nova Project 1.5 billion. We confirm collectively that we are holding these assets. They are safe, and we continue to do the best for you. We thank you for the privilege of serving you, and we are still in the house to take any questions that you may have. Thank you.
Thank you very much. Thank you, Gideon Choka. Thank you for your presentation of LabTrust DB's custodian report. And now, ladies and gentlemen, it is my privilege to welcome for the presentation of County Pension Fund custodian report, Eva Mwangi. Let's give a round of applause as she is the first lady to present something here. Karibu sana. Welcome.
The chief guest, CEO, CPF, trustees, and directors here present, distinguished members of the County Pension Fund, good morning. My name is Eva Mwangi from NCBA Bank. I'll be making my presentation doing the custody report for the County Pension Fund. This fund has 2 custodians on board. There's Equity Bank and ourselves, NCBA Bank Kenya PLC. It has also appointed 2 fund managers to make investment decisions, and this is CopTrust and Sanlam East Africa. The role and the statutory obligations of custodian has been ably presented by my predecessor, so I'll go ahead and give a confirmation of the assets under custody for the financial year of which we're reporting. We'll start with the conventional fund. We started the fund with a fund value of 5.9 billion at the end of 2018 and closed with assets under custody at the end of 2019 at 10.5 billion shillings. Of that, we were holding cash and cash equivalents valued at 261,375,000, fixed deposits in various banks at 807 million shillings, government securities being the bulk of investments, those are your treasury bills and bonds, valued at 6.8 billion shillings, corporate bonds at 14 million, quoted equities at 2.1 million shillings, and investment in property at 461,887,000. The fund also had some funds due from related parties valued at 298 million shillings, receivables of 1.4 billion, and payables totaling to 165,330,000, giving total assets for the conventional fund at 12.1 billion shillings. For the Salih fund, this is a Sharia compliant fund. The fund started with assets at 967 million shillings and closed at 1.5 billion shillings. Of that, the fund had 33.8 million in cash and equivalents, fixed deposits at 1.4 billion, and quoted equities at 8 million shillings. The fund also had some receivables of 179.6 million and payables of 93.6 million, giving total assets of 1.7 billion shillings. The chart there represents the growth over the years for the conventional fund, and you can see there the fund has continued to grow, starting in 2014 with fund valued at 324,418,000,000 shillings, and as at the end of last year, members, the fund was stood at 12.1 billion shillings. So I would like to close by confirming that we assure you that your assets for the county pension scheme are safe and they do exist. Thank you very much.
Thank you. A round of applause again. That's appreciated. Asante sana. Distinguished guests, ladies and gentlemen, and our members, that is a custodian report. May I now invite on stage again for the presentation of CPF, Individual Pension Plan, Custodian Report. I want to welcome Bwana George Mwangi. Karibu sana, George.
Thank you very much, our chief guest, chairman, our group CEO, members of Trustee, and my fellow service providers. Good morning. My name is George Mwangi. I'm here representing Equity Bank as a custodian of this fund. And I want to take you through the assets that we are holding as the end of the year 2019. In the year 2019, we can see we closed the year with 2 billion, and the summary of the assets that we are holding were cash were that 7,000. We had fixed deposit of 274 million. The government securities, which hold the lion's share of the assets, was 1.3 billion. And the corporate bond of 6 million, quoted equities 329,858. The asset under custody were 1.9. As you can see there, the 2018 we had 948. The receivables were 135 and payables 25,627. So we closed the year with total assets of 2,015,015 million. Now, the chart there shows the movement of the growth of the fund from 2014, from 63 all the way to 2 billion in the year 2019. What we want to assure the members is that the assets exist, we can account for all assets, and we can say that your assets are safe. Thank you very much and have a good day.
Let's give a round of applause once more. Thank you very much. All right. Now, ladies and gentlemen, we are moving to the next item, and that is a presentation by the scheme actuary. We have from Zamara, and this is Neil Gudka. Neil Gudka, I believe you have a binoculars on how you will be checking on the investment of the members and tell them, if you invest here, you benefit. You invest here, you win. You invest here, you get profits and so forth. So welcome. And I believe no one has touched this table. No one has touched the dais, so you are safe. Welcome.
Thank you for the introduction. As mentioned, my name is Neil Gutka, and I'm here on behalf of Zamara as the scheme actuary of the Local Authorities Pension Trust to present the actuarial valuation results of the Local Authorities Pensions Trust as at 31st December 2018. So just a bit of a quick background around Lab Trust. It was initially formed as the Kenya Local Government Officers Superannuation Fund in 1963. However, this was revoked in 2007 and the Lab Trust was formed. It mainly comprises membership of employees of county governments which have been successed by local authorities and other affiliated employers. So the scheme operates on a defined benefits basis, and what this means is that the pension benefit that a member receives in retirement is based on a formula which is related to pensionable service and final pensionable salary. Members can also commute into cash up to 1/3 of their benefit at retirement, and members contribute at 12% of their salaries, and employers contribute at 15% of salaries. So what are the purposes of this actuarial valuation? The first thing we do is to assess the financial position of the scheme. And by this, I mean, we compare the value of the assets with the value of the liabilities. If the value of the assets is greater than the value of the liabilities, then we say that the scheme is adequately funded. However, if the assets are less than the value of the liabilities, then the scheme is inadequately funded. We also investigate and report on the actual experience of the scheme since the previous valuation. For example, we assume that investment returns will be 9% per annum. And as part of the valuation, we check whether the investment returns have actually been greater or lower than 9% per annum. If the scheme is inadequately funded, then we say that the scheme is in a deficit, and we recommend the contributions that the sponsors need to pay in order to restore the scheme back to a sound financial condition. And it is also a statutory requirement for the scheme to carry out the actuarial valuation at least every 3 years. So what is the benefit in the scheme? The formula for service before 19th August 2009 is 1/480 years of final pensionable emoluments for each month of pensionable service. To translate this into something understandable, it basically targets a pension of about 75% of the member's final pensionable salary at retirement after 30 years of membership of Lab Trust. For service post 19 August 2009, this was reduced slightly to 1/500, and what this means is that it targets a pension of about 72% of the member's final salary after 30 years of membership. So to do the actuarial valuation, what we do is we analyze the data of the scheme on which the results are based. The first category of membership are your active members. If you look at the third column, which is 31st December 2018, you will see that there were 17,224 active members. So these are members that are actively contributing to the scheme. The pensionable salaries were just under 8 billion. And just to reiterate, pensionable salaries are the member's basic salary plus house allowance as at August 2009, increased at 5% every year to 31st December 2018. The average age of the scheme was 49.5 years, and the average service per member in the scheme was around 17 years. If you look at the numbers in 2016, you will see for the average age, it has increased from 47.9 years to 49.5 years, and you can continue to expect this to happen as the scheme is closed to new entrants. In terms of pensioners and spouses, so as at 31st December 2018, there were just under 5,000 pensioners receiving annual pensions of around 643 million. The average annual pension was 130,000, and the average age of the pensioners was around 66 years. The scheme also provides benefits to spouses of the pensioners and members that have passed on, and as at December 2018, there were 1,908 spouses receiving an annual pension of just over 88 million. The average age of these spouses was 57.9 years. Again, children are also beneficiaries of the scheme for members that have passed on. And as at December 2018, there were 101 children receiving annual pensions of just under 5 million. The average age of these children was 15 years. In terms of deferred benefits, so these are members who were previously employed by their sponsors and have now left service of the sponsors and have benefits retained in the scheme. There were 496 deferred members, and there were 2,261 members with outstanding benefits as of 31st December 2018. I'll just do a quick look through of the assets. So the assets were valued at 27.650 billion, mainly invested in property at 46%, followed by government securities at 39%. The next slide shows the growth of the assets from 2016 to 2018. I won't go through this in detail in interests of time, but it basically shows how the fund has moved over the 3 years, 2.5 years. So, when doing the actuarial valuation, we usually adopt certain assumptions. The key assumptions here were a normal retirement age of 60 years. The rate of interest, which is also the investment returns, were assumed at 9% per annum. The salary escalation rate was assumed at 5% per annum. And already as explained, the benefit for service prior to 31st August is based on an accrual rate of 1/480 and thereafter at 1/500. I'll move to the slide on the valuation results. So as you can see, as at 31st December 2018, in the third row, in the third column, you can see that the total liabilities were valued at 35.294 billion. Majority of these liabilities were in respect of active members at 26.819 billion, followed by pensioners at just over 6 billion. The assets were 27.650 billion. So as you can see, the assets were less than the liabilities, which means that there was an actuarial deficit of 7.6 billion, which translates into a funding level of 78.3%. The target funding level is 100%. In terms of future service benefits, so these numbers are basically what the sponsors need to contribute into the scheme to ensure that the benefits that are accruing are adequately funded for. As at 2018, this was 29.6% of members' pensionable emoluments, and this includes expenses. However, members already contribute 12%. Therefore, the recommended sponsor contribution rate was 17.6%. Please note that this number does not adjust for the deficit that has been received, and the sponsors will need to contribute additional amounts over and above the 17.6% to bring it back to adequate funding. In my final slide, what we are trying to show here is that the scheme is owed a large amount from sponsors in respect of unremitted contributions and interest thereon. The amount owed is 22.5 billion. Of this, as at 2018, in the financial statements, 20.5 billion was impaired, which means that the asset value was 27.650 billion. If I add the amount A, which is the amount impaired of 20 billion to the 27.65 billion, the value of assets should have actually been above 48 billion. With the liability value being 35 billion, the scheme would have been in a surplus at a funding level of 136.4%. So the message we're trying to bring across here is that it's extremely important for the sponsors to ensure that any unremitted and outstanding contributions are paid into the fund to ensure that members' benefits are adequately funded and secure. Thank you. That's the end of my presentation, and we'll take questions during the question and answer session.
I appreciate Neil. Thank you so much. Thank you, Neil Gudka, again from Zamara. We appreciate you. Thank you very much. Now, we will go straight to the next item, that is presentation by NatBank, Corporate Trustee. And we have, this is a County Pension Fund and IPP, Individual Pension Plan. I want to welcome Timothy Wambui for the presentation by NatBank Corporate Trustee. Karibu sana. Welcome. Round of applause again. Thank you.
Thank you, Your Excellency. Your Excellency, Mr. Governor Wycliffe Oparanya, Chairman Dr. Julius Kingetich, CEO Jose Akili, and Caroline of RBA, and my fellow trustees who are here, and service providers around, all protocols observed. Good morning. I'll take you through the the trustees' report, and for the county pension fund, and also for the IPP, that is the individual pension plan. But I'll start with the CPF, and we are saying it is a scheme that is established under the RBA, and it's a defined contribution scheme, which means both the sponsor, the employer and the employee contribute into it. Then it's a tax-exempt fund. And then we are saying in 2019, I think this was 2018, when we registered the SALI fund, which was to cater for those members who would like the investments to be invested in compliance with the Sharia rules. As you can see, the funds increased during the year. We'll begin with the conventional fund, which began at 2.1 billion shillings. Grew by 2.1 billion shillings in 2018, but in 2019 it grew by 5.8 billion shillings. That's almost doubling. Okay, the SALI fund began at 983 million shillings, closing at 789 million shillings during the year. Then members who are watching us from home, we are saying the fund has 160 sponsors with 43,000 employees. And on average, the contribution rates are between 12% for the employee, 15% for the employer. At the beginning of the year, we had 36,000 members for the conventional fund, and we closed with 43,000 members for that fund. SALI fund, at the same time, grew by 1,300 members to close at 7,319 members. So like I said again, this fund was formed in compliance with the Asakila in 2010, which closed DB schemes. You had Gideon saying the DB scheme is closed to new entrants, but the DC scheme was formed now for both employer and employee to contribute, and the rates are there between 15% for the employer and 12% for the employee. Sorry, employee 12%. So again, you can see here how the fund grew and where we invested. I think the CEO, Nicholas Idondeka, took us through this slide, so I will not belabor on it. But what I want to point out is that you can see the assets grew by 77%, 6.8 billion shillings to 12 billion, almost doubling. Okay? Whereas the membership, I can see membership grew by only 21%. Okay? So we are saying the growth in numbers is not really because of growth in members. It was because of two factors: members increasing their savings, and the fund manager doing a good job. So we'd like to appreciate Mr. Nicholas Idondeka, pigeni makofi kidogo, for growing the fund by that value. So assets under management, 15 billion shillings. As you can see, most of our assets are in government securities, at about 6.8 billion shillings. We're investing in property, 400 million shillings, at about 3.2%. And all these investments, like the fund managers told you, they are limited by the RBA limits. And you can see all of them are within the limit. Okay? So we are appointed by the promoter. In this case, it is CPF, the promoters of this fund. They're the ones who have appointed us. And our auditors, Deloitte, who are in the house, they express their willingness to continue in office. That shall be, of course, discussed during this AGM. So what is our responsibilities in this fund? And we are saying our work is to prepare the financial statements for each year, which give a true and fair view of the disposition of the fund's assets at the end of each and every financial year. We are also responsible for preparing these statements in accordance with the IFRS and the RBA Act. They give us some guidelines which we use when you're preparing these financial assets. We also accept responsibility as the trustees of these financial statements, and we know they've been prepared by, in conformity with the IFRS, like I said, and we know they show a true and fair view of the transactions that took place in 2019. Statement of trustees' responsibilities. You can see there, we acknowledge we are making an assessment of the fund's ability to meet obligations, especially in these COVID-19 pandemic times. And I think these are note 27 on the financial statements, which are available online. I think members can go through them. And we also know, we are also saying that this audit does not relieve us of our responsibilities in terms of investments of the scheme. I'll quickly take you through the individual pension plan. And we are saying all these statements are more or less the same between the IPP, the CPF, what I've just taken you through, and the IPP. And we are saying CPF individual scheme was previously called the Lab Trust Individual Pension Scheme and was registered in 2014. The funds, the increase in assets, last year, assets grew by 1 billion shillings, a whole billion shillings, from 280 million shillings in 2018. I think there's some good performance there. Funds under management, I think this Nicholas here took us through 2 billion shillings in mostly in government assets. So again, we are saying we are appointed by the scheme promoter, and the Deloitte, who are in the house, are expressing their willingness to continue in office as auditors. So our responsibilities, same as the CPF, whereby we do not absolve ourselves from any financial, from the responsibilities with regards to the financial statements. I think members, we have a chance for a Q&A after these presentations. Thank you so much.
Thank you again. Thank you so much. Thank you. Thank you so much, Timothy Boy. And we want to appreciate that you've really, I know it have been a long presentation, but you've made it short. And I also believe for the viewers and the members who are also, we are together in this forum, you will send in your questions, and later on we will be able to give you answers. And I want to now request presentation of the financial statements and audited accounts for the year 2019. I want to request Lab Trust Defined Benefits, Price Waterhouse Coopers, Samuel Manko. Samuel Manko, karibu sana. Welcome. Sorry.
Chief Guest, Honorable Wycliffe Oparanya, distinguished ladies and gentlemen, all protocols observed. My name is Samuel Manko, on behalf of PricewaterhouseCoopers, here to present our audit opinion for the financial statements ended 31st December 2019. So we audited the accompanying financial statements of the Local Authority Pension Trust, which comprised of the statement of net assets available for benefits as at 31st December 2019, and the statement of changes in net assets available for benefits and cash flows for the year ended then, and the notes to the financial statements, which include a summary of significant accounting policies. In our opinion, The financial statements give a true and fair view of the financial position of the local authority pension trust as at 31st December 2019 and of its financial performance and cash flows for the year then ended in accordance with the international financial reporting standards. Our basis of opinion: we conducted our audit in accordance with the international standards of accounting, of international standards on auditing. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of the financial statement section of our report. We are independent of the scheme that is in accordance to the International Ethics Standards Board for Accountants, International Code of Ethics for Professional Accountants, together with the ethical requirements that are relevant to our audit of the financial statements in Kenya. We have fulfilled our other ethical responsibilities in accordance with the International Ethics Standards Board of Accountants Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis of our opinion. The opinion has been signed by FCPA Richard Njoroge, practicing certificate P1244. He's the signing partner independent of the audit. Thank you.
Thank you very much. Thank you, Manko. And now, ladies and gentlemen, I want to remember we still on the same again presentation of financial statements and audited accounts for the same year, and I want to request on IPP and County Pension Fund, Deloitte and Touch, Dennis Nyamwaro. Dennis, please, welcome. It's already sanitized. Safe.
Thank you very much for the opportunity. As you've been informed, my name is Dennis Nyamwaro. I represent Deloitte, who are pleased to serve as the independent auditors for the County Pension Fund and the CPF Individual Pension Scheme for the year ended 31st December 2019. So basically, I think most of the presentations have been done by the scheme service providers. And our role as auditors is very simple. We're just going to present our opinion for the audited financial statements for the... So I'm going to begin with the County Pension Fund. So what we are saying is that we have audited the accompanying financial statements, County Pension Fund, as set out in page 25 to 50. Which comprise the statement of net assets available for benefits as at 31st December 2019, and the statement of changes in net assets available for benefits and the statement of cash flows for the year then ended. And in our opinion, what we are saying is that the accompanying financial statements give a true and a fair view of the financial transactions of the fund during the year ended 31st December 2019. I believe the remaining part of the report you can be able to read on the basis of our opinion. So we have audited based on the international standards on auditing and IFRS. So it's a long report, but at least you can be able to go through it. Then the report has been signed by CPA Freda Law, practicing number 1537, who is the signing partner responsible for the independent audit. That is for the County Pension Fund. Then we also have the individual, we also placed to serve as the auditors of the CPF Individual Pension Scheme for the year ended 31st December 2019. And the accompanying financial statement are set out in page 19 to 39, which comprise the statement of net assets available for benefits as at 31st December 2019, the statement of changes in net assets available for benefits, and the statement of cash flows for the year then ended, and a summary of significant accounting policies and explanatory notes. So in our opinion, we are saying that the accompanying financial statements give a true and a fair view of the financial transactions of the fund during the year ended 31st December 2019, and of the disposition at that date of its assets and liabilities. Other than liabilities to pay retirement and other benefits falling due after the end of the year in accordance with the International Financial Reporting Standards and the requirements of the Retirement Benefits Act. So again, as I said, the other part of the report, you have it in your financial statements. You can be able to go through it. But again, the signing partner responsible for this opinion again is CPF Freda Law, practicing certificate number 1537. Thank you very much for your time.
That's great. Let's give a round of thank you so much, Nyamaro. All right, thank you, Nyamaro. Ladies and gentlemen, those who are also at home, want to request you can also join. You can also join today and become a member by simply dialing the number. Just get your phone and you can dial *289#. I think that is the number that you will join, and you can also secure your future with us. It is being said very well that everyone, from the small child to a mature person, you one day grow old. So you need to secure the future by saving actually for that time. When you will be out of energy, you'll be out of hustle and tussle, and that is the time when you need to relax, and now your savings will take care of you. Ladies and gentlemen, we will again move to the presentation, and the presentation will be done also live from a position where our presenters will be, and we will have remarks from the scheme stakeholders. We have Water Services Providers Association CEO together with its chairman, the Water Services Providers Association chairman. We will be having presentation from the locations where they are, and we believe that we are ready to get them straight. Let's join them.
My name is Anthony Ambugo, the Chief Executive Officer of Water Services Providers Association. This is the premier umbrella body of all water companies in the Republic of Kenya. We are happy to be associated with the County Pension Fund as they undertake their unprecedented 17th Annual General Meeting virtually. And we are happy because we are aware that all the nations of the world are facing very difficult and challenging times because of the COVID-19 pandemic. But all in all, life has to continue, and as this AGM is taking place, we are proud to associate with County Pension Fund and congratulate them as they share their operations during this 17th Annual General Meeting. I think as an association we are proud because we have had a long relationship with County Pension Fund, and we shall continue to advocate for more companies because our membership is wide. Out of the 88 regulated water utilities, 70 are our members, because we know the role of pension funds in the role of our members as they exit the work stage and join another phase of life. These funds are very, very important in securing their future, giving them hope, and ensuring that they are able to fulfill lives. And we also, at this juncture, allow me to sincerely, from the bottom of my heart, thank the Board of Trustees, management and staff of County Pension Fund. They have joined hands with us during the fight, in this fight of COVID-19 pandemic. And I want to report that we received 2,000 liters of hand washing soap, which was distributed across the country to 60 water utilities, because As you are aware, the protocol of washing hands using soap against running water is very, very formidable in protecting human lives and killing the virus. So we are very grateful. Thank you.
My name is Michael Mangeli, MD Mavuko Water and Sewage Company. I'm the chairman of the Water Service Provider Association. And on behalf of the water sector in the country, I would like to take this opportunity to congratulate Mr. Kili, the management of CPF, the board of trustees of CPF for holding this 17th annual general meeting on behalf of that management, on behalf of the CPF. Us as a water sector, we are happy with what we have seen in the CPF. We have seen CPF grow over the last 5 years. We've seen their financial statements at least improving every year, and we are proud of that. Mine is only to encourage the management of the CPF that they can continue doing diversification so that at least they can have more returns for their pensioners. We would like also to commit ourselves to the water sector that we'll be committed to make sure at least every month at least we remit the deduction that we are deducting from employees to make sure at least they reach CPF on time for them to enable them so that they can do their own investments in other areas. What we would like also to urge the management of CPF is that we've not had any employee complaining of not getting the dues when he retires, and that's one of the things at least we are proud of. And we'd like to say thank you for them, and thank you for Mr. Kili and the management, because all the staff who have retired, starting Mavoka and all other water companies, we have not heard of any complaint of one saying that he went to CPF and never got his funds. And I would like to say thank you very much for that, because it can be so bad for an employee to retire, then he goes home and then he doesn't get his dues. So mine, I want to wish you well. And after this pandemic, I believe at least we'll continue working together. We are happy and we are proud of the support that we are getting as WASPA from Mr. Kili and his team. And we are proud of you. Thank you, and I wish you all the best.
Round of applause to the chair, that is Michael Mangeli from the Water Services Providers Association, and for the reassurance again that we will, whether or without this pandemic, we will continue working together. So thank you very much, including your CEO, Anthony Ambugo. So ladies and gentlemen, from that now, we will again would like to have a presentation of report by the CPF Group Managing Director and the CEO, Mr. Jose Akili, who has already led this CPF group with integrity and proper leadership. So I want to welcome the group MD and CEO, please. Let's sanitize here first before you give us your presentation of the administrator's report. Karibu sana, Bwana MD. Welcome.
Okay. Now, good afternoon. I believe, oh yeah, still morning, a few minutes too. Yeah, good morning, everybody. Good morning, members of our group of schemes. Your Excellency, the chief guest, whom we expect to arrive here shortly. Excellency Wycliffe Oparanya, and possibly the Governor of Kisii will also be here. Our chairman of the Laptop Board, Dr. Kwedo, who is in Eldoret and is going to be giving us his speech from Eldoret, and the other representative from our corporate trustee, Mr. Timothy Wamboi, and his colleagues. Also our service providers, appreciate all of you. And of course, RBA, the CEO, who is represented here by Caroline Wabwire, and all the other distinguished guests who are with us, Kenya Broadcasting Corporation team, who are really doing a wonderful job supporting our dream of reaching our members nationally. I want to repeat again that, you know, KBC is a national station, and millions of people watch, and I'm informed that millions are tuned in to this virtual event happening here. And many thousands of our members are able to attend the AGM for the first time in numbers. And I want to say, members, amjamboni, tusalamiane kwa hewa. Now, my report is a brief one because the service providers have given us a lot of information. What we have as the scheme administrators, because we manage the 3 schemes, among others we are managing, is we do manage total assets of more than, I think, over 80 billion, if I'm not wrong, because you combine the lab trust, the county pension fund, and the individual scheme. Members, we have tried our best to reach you out there in the country. I know we do have branch networks in Garissa, Mombasa, Meru, Nyeri, and also in Nakuru, and Kisumu, and Eldoret, and of course Bungoma, I think. Now, through those branches, we have been able to serve you well. We engage with your county government, executive team, the legislature, and all the other sponsors, the water companies across the country. We are happy to really work with WASPA, who represent all of you. And we know you are all tuned in today to really receive your report of your schemes, which we have tried our best to manage on your behalf. We are very proud of our service providers because they are always giving us the best, even in times of challenges. We want to appeal to our large sponsors like Nairobi County, Mombasa County, and then Nairobi Water and Sewerage Company to do their best to really engage with our trustees and ourselves to actually try to resolve the huge unremitted contribution which have been mentioned here by our actuary, which we believe if we receive that and invest it, the members will be happy when they retire. We are, of course, making all efforts to collect that, and success has been realized here and there, but we are hoping that we will do more in the 2020 and 2021. Going forward, we have a number of activities, things which have happened in the course of the 2019. We were able to realize a huge growth in our membership of the county pension fund, and the scheme is now the largest within the county government sector. I know we do have our sister fund, LAF Fund, and we also have the LAP Trust, both which are close to new members. So County Pension Fund presents where the future of county government's pension arrangement is moving towards. The individual pension fund has also grown in leaps and bounds, and we want to encourage Kenyans to really consider saving. In fact, what we actually are able to say is that amongst the people who are able to survive a bit comfortably during this time of COVID-19 are members of our pension funds, because they are earning something even if they're not working. Most of our Kenyans are not able to earn anything because there's no work to do, jobs are being lost, but the pensioners who made that wise decision early in their lives, and the employers who facilitated that, are able to survive by getting something from us. And that one we determined to make sure they continue receiving. We will always be sending their pensions to them by the 20th of every month without fail, and we hope the systems will allow us to do that. We have been able to implement full paperless transition. The COVID-19 experience has actually not interfered with the operations of CPF group schemes. All our staff basically are working from home. We were actually able to test the systems, and we completely, for one day, we totally ran our office from outside, wherever people were. That is the beauty of being an innovative organization. None of our members has been cut off in any way. They can communicate. They're always able to communicate with us using their phone and any other systems which technology has allowed us to have. We are, of course, experiencing challenges a little here in terms of investment, particularly in the property area, because the properties we have, we are landlords, and many tenants are having challenges to pay their rent. What we have done is to talk with them so that we don't lose them. We may have, possibly in 2020, we may experience about 30% drop in income from properties because we have had to concession to them so that they don't leave. Because if they leave, we'll have vacant offices, vacant properties, and we shall have more losses. So we have done the same as we engage with our fund managers to ensure that on the other areas of investment, we have nothing to worry about. We encourage our members who are people who like to keep their faith strong by not getting involved in haram or things which Sharia law does not permit. And you can see that from the report we are giving, this scheme has grown. The Sharia, what we call Sali fund, has grown almost by more than 25% since the last time we had the AGM. And this means that many people are realizing that it's actually possible to still make money, make profits, grow your fund, and still keep your faith. We have also introduced a product we call trust fund. A trust fund which we manage for those beneficiaries, some who may have passed on and their families are not able to take care of the young children. We manage the funds based on their own wish under this trust fund. And we have decided to keep that fund again in the same structure as a normal pension fund, even though there is no requirement for it to be maintained as that. So we have appointed trustees for it. We have also appointed a fund manager and also custodian and also auditor for that. So the members are quite happy with taking care of their school fees for their children and also taking care of some of the disabled people who form beneficiaries of our schemes. So these are some of the activities we have done in 2019, and we want to report to our members that we continue to value them. We will try our best to ensure that they get the best and keep the institution or their schemes up to date in everything. Now, there are a number of changes which the law brought in 2019, and I think possibly the regulator will be talking about some of this. But it's important to mention what some of these have impacted on the members. I know most of our members have been seeing from the reports I'm receiving on my phone and questions. One of the major, I think, question of members are having, Carol, and you'll have to deal with it, is the worry about this taxation. The members are really worried about if their pension is going to be taxed after they have retired. I want to tell members that possibly we might survive this one because on our appeal to the parliamentarians, they seem to have listened and they may actually not permit their pension to be taxed at 65 as we had worried. We have also implemented broad the governance principles which have been brought on board by the Retirement Benefits Authority. And that's why you find that we felt compelled that we must do everything, hold our board meetings on time, even if, and I want to say that we have been having all our usual board meetings without any failure by the trustees, the company itself, as well as now the AGM. And this is because of our belief in good corporate governance. The second issue we have done is to ensure that we keep our members informed at all times, and this has really been a very successful model we have adopted. I think one of the first pension funds in Kenya to publish in the media the books of accounts for the scheme since the year 2007. So I think we believe that this is a good example to set for all the pension funds to be transparent and let their members know and other people, stakeholders, to know what's going on. We are happy that we participated and indeed worked with the government as well as the Retirement Benefits Authority to unlock at least up to maybe 40% of the pension savings to be used by our members when they are still in service to acquire homes. We prefer to define this particular benefit as a pre-retirement home ownership, home benefit, because most of our members tell us that they will always use their pension at the end to actually build a home. So if we assist them to have a home now, they will not need to use their pension when they have reached retirement to do that. So this is something which we want to applaud the government for permitting this to happen. I know there is a worry among the financial sector players that there might be a reduction as an impact on the money available in the financial market, but that's not true. We believe this is an incentive, very strong incentive, to encourage every Kenyan to actually put money in a pension fund, which then will mean there is a bigger cake to be shared between the players who are in the financial sector as well as the members themselves. We are set, possibly, hopefully by the end of the year, this year, to announce our first establishment of a post-medical retirement fund for our deceased members. We are an advanced stage of establishing that, and we shall be informing members when they can now begin to increase their contributions towards saving for the post-retirement medical for themselves. I think with those remarks, I would like to say that we are happy to have all of you here, and we are happy to participate. And in fact, this we consider to be the new normal for us. Having a virtual AGM and being the first trailblazers in this country, we believe that this is the way to go. I want to report to even the regulator that by doing this meeting the way we are doing today, with the help of KBC, we have cut the cost of an AGM by half. And we haven't got more members watching and participating in the meetings. If you see the number of questions and comments coming through our social media here, it tells you that people are very comfortable with this system. And I was surprised that some of the questions are coming from my pensioners who are older than 60, 70 years, and they are sending SMSs to me, sending WhatsApps to all of us here. So there are more questions, there are more interaction, and I think this is something which should be internalized by Kenyans and all of us. I think so. Yeah, very good. So with those remarks, I want to say thank you very much, and I will finish there. Asante.
Let's all appreciate the MD. Let's appreciate Anawase Akili. Thank you very much. That was the presentation of the administrator's report by the group managing director. Now, thank you so much again. We want to move to the next item, and that is we'll get the remarks from the scheme's stakeholders. That is County Pension Association. We have Ezra Ngonje. That is the chairman. Chairman Ezra Ngoje, and we will get
the
back.
Board of Trustees. I'm Mr. Ezra Ngoje, the Chairman of Lab Trust Association. I'm thanking the Board of Trustees for giving us our pension regularly by 24th of every month. I'm appealing to them as well to see that they reconsider giving us our increment long overdue. I'm appealing to the government as well that the dissolution of Lab Trust will harm many of us, because even those people who have retired, they do not know their fate. Even the money which was retained by the former county council and the present county government is not, we are not told how they are going to be collected. And therefore, we are appealing to the government not to dissolve our Lab Trust. There is taxation which was done during the budget day. I'm requesting the government to reconsider that, because during the time we were in service, our salaries were taxed. It is not good to retax it when we are getting this little pension. Some of us are getting as mere less than even 3,000. If it is taxed again, we feel we are now being oppressed so much. May I appeal now to my members who have not joined the circle. Please join the circle. That is the only way we can educate our children, we can educate our grandchildren, and we can conduct the small businesses which we have. Long live Lab Trust, long live CPF.
Thank you very much, Chairman Ezra Ngoje. That is the County Pension Association Chairman. Now, ladies and gentlemen, again, we will proceed to have a presentation of the Chairman's report. That is presentation of Trustees' reports by Lab Trust Board Chairman, Dr. George Kwetho.
George Kwetho, the Chairman of Lab Trust. It is with great pleasure that I present to you the integrated report and audited financial statements for the Local Authorities Pension Trust, that is Lab Trust, for the year ended 31st December 2019. The Board of Trustees for the Lab Trust Defined Benefit Scheme continues to oversee the fund activities and performance in keeping to its mandate duty to the members. The Board aims at ensuring optimum returns on investment and prudence in administration and management of the fund. It is important to remain cognizant of the fact that Lab Trust Defined Benefit Scheme remains a closed scheme. To this end, the scheme has not admitted new members since June 2011, and as such is expected to continue serving the existing members until the last member retires and their pension is paid out to the last beneficiary. In the year under review, the scheme's value as at the 31st of December 2019 was 33.1 billion, from 30.5 billion as at the 31st December 2018, representing a growth of 8.5%. The increase in net assets for the year was 2.6 billion. The growth was majorly attributed to investment performance and management efforts in collecting the outstanding debts. Total unremitted contributions in the year under review stood at 21.78 billion, and the trustees have put in place active strategies to ensure full settlement of the outstanding debts. In accordance to the RBA regulations, an actuarial valuation was conducted and the report completed and released in April 2020. The valuation does not capture the unpaid debt by employers, amounting to 21.78 billion. The scheme funding as a valuation stands at 78%. To improve the position, the trustees are aggressively pursuing the county governments and those water companies owing them so that the amount is settled. If this is realized, Lab Trust DP scheme will be more than 100% funded, on the basis of which the augmentation of the benefits will be reviewed by the trustees. In consideration of the impact of inflation to the pensioners, since the last increase was way back in 2015, trustees have approved a one-off pension increase to a maximum of 3%, with a minimum pension of 5,000 Kenya shillings for the principal pensioner, with effect from 1st July 2020. This will therefore be implemented in July 2020 payroll. In the year under review, the scheme celebrated its 90 years anniversary on Monday, 3rd June 2019 at the Charter Hall, that is City Hall. The occasion served as an opportunity to engage the scheme's members and the key stakeholders, and highlighting the finding of the study that was carried out by Infotrack Research and Consulting on behalf of the scheme. The study actually established that fewer Kenyans are saving for retirement, deepening the post-employment time bomb. The trust takes compliance with the laws and regulations very seriously. The trust is primarily regulated by the Retirement Benefit Authority and equally complies with regulations of other authorities, including the Kenya Revenue Authority and the Unclaimed Financial Assets Authority. During the year under review, the trust remained fully compliant with the various laws and regulations. And the trustees have ensured that they continuously monitor compliance. The trust was also successfully audited by the Unclaimed Financial Assets Authority and found to be fully compliant. The trust undertakes to remain compliant with the various regulators in future. The remuneration of the trustees for the financial year ended 31st, 2019 is detailed on the page 69 of the annual report. And on behalf of the board, I take this opportunity to thank our esteemed members, beneficiaries and pensioners to whom we owe the privilege to serve. I also extend on behalf of the board my appreciation to the scheme's operators, and they include the county governments, the water companies and associated organizations. In the same vein, I also extend my gratitude to the industry regulator, that is the Retirement Benefit Authority, for continuously steering the industry to excellence for the greater good for the members. The scheme remains steadfast in its commitment to deliver value for all stakeholders. I wish to thank the corporate administrator, that is CPF Financial Services. The strides made by the scheme in the year under review can only be attributed to your tireless efforts. In closing, I express my gratitude to my fellow trustees who have continued to provide leadership and ensure that the scheme continues to thrive and strive to fulfill the living and the lives of our members. Thank you very much. God bless you.
Round of applause. Thank you very much, Chairperson, Lab Trust Board, and Dr. George Kwetho. Your Excellency, we'll now move to the next speaker, and this is on behalf of the County Government Workers Union, Kenya County Government Workers Union. We will have the Secretary General, Honorable Robert Duba.
My name is Robert Duba. I am the General Secretary of the County Government Workers Union. The importance of pension, provision of support for old age cannot be overemphasized. It's so critical because life in working or working life divides your life this way: active period and inactive during your days or the last days of your life or the last years of your life. And the last years, you have no energy. The employment life or the age in itself has sucked all the energy out of you. And if you have no support at that age, then it becomes meaningless even all the years you have worked. So the provision of retirement benefits in any form or in all its form, be it monthly pension and other forms of annuities, or provident fund, broadly direct contribution, or defined contribution or defined benefit, in all its form, is so critical. Pension terminal use is the undertaking of an employer But all the pension scheme all over the country, depending on the sector, is all an undertaking voluntarily, where an employer says, John, Ali, Kaballe, I've employed you, and say, inshallah, we'll be together for 60 years until your retirement age. After that, I undertake then to pay you as follows until your demise. So it's an undertaking, and it's considered irrevocable. So employers must have at the back of their mind, this is not something forced on them. This is something they take out for their employees because it's necessary, it's inevitable. You cannot suck all my energies of my youth during my youth and refuse to take care of me during my exit from service. So it's critical. Employers must understand it is not an outside imposition on their business. It is not. It is internal. They take it voluntarily, saying, because you will have put in, assuming you take a job at 25 or 26 or even 30, by the time you retire at 60, you will have put in 30 years in this employer service. And it's only fair, it's only reasonable. It's a dictation of equity that you take care of this person after that period. So employers must shed off this feeling that it is a favor they are doing. Employers must forever realize it's their responsibility to deduct and remit. And if there are arrears to be paid, they must endeavor to pay. Lab Trust, since 1929, has survived to get to this point, must be congratulated. They have done very, very well. And I know people walked in, people walked out. They survived various, the early day, cowboys who never stopped at anything. They could borrow from these funds, make them deposit their monies in irregular or limping banks that later sank with many money. And they survived and they got here. And we have no doubt they will still survive. God doesn't sleep. He will not let workers like this go without their pension because they have no energy, they have nobody else to support other than their schemes and God, their creator. So thank you very much.
Thank you. Let's give a round of applause to General Secretary, Kenya County Government Workers Union. It's actually since 1929, as you said, is because of transparency and accountability. Now, ladies and gentlemen, I would like to also invite the County Assembly's Forum Chairperson, Honorable James Ndegwa Wahome, to give his remarks.
The guest of honor, His Excellency Wycliffe Ambassa Oparanya, who is also the chairman of the Council of Governors of Kenya, and also the governor of Kakamega County, the CPF Group Managing Director and CEO, Dr. Jose Akiri, the County Pension Fund Board Chairman and members, Honorable Speakers of the County Assemblies of Kenya, and the Honorable Members of the County Assemblies, and also members of the County Executives and County Government Service. Ladies and gentlemen, let me begin by thanking and congratulating the County Pension Fund for organizing this inaugural FASHU meeting, or rather FASHU AGM. This is a great milestone and a feat, especially given the prevailing circumstances brought about by the COVID-19 pandemic. As county assemblies of this country, whereof I am the chairman, we really applaud the CPF because of ensuring that over and above this new normal, that they are able to converge all the stakeholders for this particular meeting. As a long-standing partner of County Assemblies Forum, CPF remains a key stakeholder in the affairs of the employees of the county assemblies and the county executive in this country. All the 47 county assemblies have subscribed to the pension funds scheme through either of the three schemes, which is as follows. RAP Trust DB scheme, where 35 of our 47 county assemblies, mostly through employees who transitioned from the local authorities, are registered. Then we have the county pension fund, where 43 of the 47 county assemblies are also registered. And finally, the county pension fund, which offers an option for additional individual savings through the individual pension plan, in which we have 41 county assemblies subscribing to this particular product. In the overall, you'll find that all the 47 county assemblies, in one way or another, they do subscribe to the services and products of the CPF. I can confirm that in the hands of CPF, our members who are drawn from the County Assemblies Forum are assured of a secure future. We have witnessed those who have served before us get their payments in a very timely manner. And we really congratulate, thank and are proud the CPF for this professional and ethical standards, and wherein we have no doubt they are trailblazers in this particular area. And in closing, I wish to once more thank CPF for the support they have accorded the County Assemblies Forum, and we are looking forward to more areas of collaboration and cooperation. In particular, we are grateful that indeed you have stood with the county assemblies during this COVID-19 pandemic, having donated 470 liters of hand-washing soap and 470 liters of sanitizer to each of the 47 county assemblies. I wish all our members and the general membership of the scheme well as they participate in this AGM remotely. Thank you and God bless you.
Let's give a round of applause to Honorable James Ndegwa Wahome, that is the chairperson of CAF, County Assembly Forum. Now, Your Excellency, allow me to welcome Caroline Wanjala Wabwire to give us the remarks by the scheme's regulator, that is Retirement Benefit Authority. So, Caroline, please, before you give us your remarks, allow us to sanitize so that you are safe, still keeping by the norm of proper sanitizing and social distance. Thank you so much. Karibu sana. Welcome.
Good afternoon. The chief guest, His Excellency Honorable Wycliffe Oparanya, Chair of the Council of Governors and who is also the Kakamega County Governor, Dr. Julius Kimenitich, the Chairman, CPF Financial Services Limited, Bwana Jose Akili, the Group Managing Director and CEO, CPF Financial Services Limited, the trustees, CPF Pension Fund and Individual Pension Scheme, and the trustees also of the LAP Trust DB Scheme, represented by Oscar Juma here, distinguished guests, members who are watching us from across the country, either on Zoom, on the various social media platforms, and live on KBC, fellow service providers, good afternoon. Now, we are thriving in an pandemic, and I think this is one of the ways to show that indeed we can thrive in a pandemic. I'm here on behalf of the Chief Executive Officer of the Retirement Benefits Authority, Mr. Nzomo Mutuku. He would have really loved to be here, especially to participate in this first ever held virtual AGM. Regrettably, he had a prior engagement and was not able to attend. I hope you will receive his apologies, and he sends you very warm regards and wishes you a very successful AGM. He believes he will be able to catch part of the proceedings after his engagement on live TV. Last year, we congregated in the beautiful county of Mombasa for these AGMs. Unfortunately, today, amidst unprecedented times and living the new normal, we are holding these AGMs virtually and broadcasting to members across the various counties. The Lab Trust DB scheme has a number of pensioners, and most of the times during these meetings, the pensioners will meet a colleague they worked with and probably share a hug, send a warm greeting, but today that's not possible. But despite that, we are giving credit to technology that we are able to maintain social distance while still being able to participate at this AGM. Our sincere appreciation to the trustees and the administrator for convening these AGMs virtually and also making it possible to have a live broadcast. I'm sure we can all attest that there has been a lot of planning that went into this success of these AGMs. The same way we have seen a number of listed companies holding virtual AGMs, this is also testament that our pension sector is leveraging on technology that enables us to connect with each other and provide information and services. Ladies and gentlemen, the pandemic calls us to rethink how we live our lives, how we do business, how we interact. The situation presents a number of challenges, but also it does present opportunities. The pandemic has adversely affected various sectors of the economy, and the pension sector has not been spared. For example, with the closure of some companies, employees have lost jobs. Some have been sent away on unpaid leave. Some have had to take pay cuts. This has not only led to a loss of income in their families, but has also affected remittances to retirement benefit schemes. And equally, there has been early access of retirement benefits. Our dream of Kenyans contributing and living a comfortable life in retirement is impaired. We are likely to see more Kenyans, regrettably, retiring to poverty. So what does this mean? It calls us to review the situation, to work together, to find solutions to avert the looming crisis. Bwana Governor, we are happy that you're here, and I'm sure you'll work with us. Your presence here is only testament that as the Council of Governors and as governance, you keep retirement benefits as one of your prime objectives. So we are happy that you've taken time to be here with us. Further, globally and locally, the pandemic has negatively affected the economic environment. Taking into account the impact of this pandemic, we are going to see economic shocks in our economy. Growth has already been projected to be about 2.5% in this year, down from 5.4%, which was recorded last year. This means a likelihood of decline in scheme assets and, of course, investment losses, and that means that our pockets, our pension benefits are impacted. We have already witnessed some listed companies that had declared dividends, either recalling those dividends or varying those dividends. We have also seen negative returns posted by some schemes in the first quarter of 2020. This news is worrying to you and me. It's worrying to the Mama Mboga who has taken time to save a penny for their retirement. It's also worrying to the white-collared executive who has sacrificed to save through a retirement benefit scheme. We are therefore called upon, all of us seated here, the policymakers, the service providers, the trustees, to become innovative and find ways to review our investment models so that we can cushion retirement savings against economic shocks. Pensions, being long-term investments, can also take advantage of the prospects of good bargains now with potentially high returns in the future. I'm sure our fund managers are doing that. Despite the fact that members are very cautious and would ask many questions, I'm sure you will have good answers and you will take advantage of those opportunities. Now, ladies and gentlemen, I will quote from Robert Kennedy, a US senator and attorney. He said, All of us might wish at times that we lived in a more tranquil world, but we don't. And if our times are difficult and perplexing, so they are challenging and filled with opportunity. The question then we must ask ourselves is what opportunities are presented by this pandemic? First, it's not all doom and gloom, there's some good news. The economy is expected to rebound next year and increased growth will be witnessed. We are optimistic then that pension funds will also rebound. Fund managers are now more than ever called upon to learn from this situation and adopt innovative ways of investing scheme assets to cushion members. Trustees are called upon to be more proactive, to engage with service providers, to benchmark with their peers, to incorporate broad best practices in management of the schemes, and with this, we will be able to see good returns for our schemes. Secondly, an opportunity has been provided for us to shift to digital technologies for provision of information and services. The AGM today is a perfect example of the benefits of technology. Despite being apart, we continue to receive timely information on our schemes' performance. There are other examples we can name. For instance, schemes can now take advantage of this situation to embrace online voting in appointment of trustees. This will in turn reduce travel time and expenses that would have been incurred by members traveling from far-flung parts of this country to exercise their voting rights. I think Mr. Kili has already told us that at this AGM, they've saved quite a number of expenses that they would have incurred in planning a physical meeting. Third, low coverage and savings can be enhanced in the digital era. It is estimated that about 62% of Kenyans, translating to about 30 million, own a mobile phone. This as compared to only 3.2 million saving for retirement. By leveraging on technology and at the click of the button, Kenyans should be very able to open a digital pension savings account, make savings, review the progress of their savings, get statements, and ultimately withdraw their savings at the right time. This is not only a simple, convenient, flexible way to save for retirement at one's comfort, but also wherever they may be, and it's also cost effective. We are pleased to note that a number of players in the industry, including CPF Financial Services with their M-Pension, have already embraced these digital savings products. Lastly, as we assess the pandemic on our operations, we are also called to include the effects of COVID and any other unforeseen pandemics in our future business plans and projections. We are called upon to rethink our business continuity plans and their robustness. Ladies and gentlemen, it's not all gloom, as I've said. Amidst this crisis occasioned by the pandemic, we received very good news as a regulator. The Kenyan pension system was ranked the second best in Africa and 55th globally, according to the Alliance Global Pension Report of 2020. This means our various efforts to put in place solid structures to ensure a stable sector and progressive investment guidelines have actually yielded fruit. Let me now take a sneak peek into what has been happening in the pension sector. Just like your schemes have reported tremendous growth, the pension sector has also continued to witness growth over the years. As at 31st December of last year, the industry held assets worth 1.29 trillion, invested in different categories. Of course, government securities still continue to wield the highest at about 42% of the investments. This is a very impressive growth from 100 billion, which was being reported in 2001. Again, we saw something different as compared to 2018 when schemes had not ventured into private equity. The year saw a record of about 0.1% of the funds invested in these alternative asset classes. The overall enrollment in retirement benefit schemes stood at 3.2 million, which is about 22% of the labor force. A very low figure, and hence the need to ensure that more Kenyans are encouraged to join retirement benefit schemes. And we call upon you to be our ambassadors, to tell your kin, your children, your brothers and sisters that it's important that they start thinking about saving for retirement. In our current strategic plan, we have committed to expanding coverage, mainly through reaching out to the informal sector, who remain largely uncovered. I'll confirm that, Mr. Governor, not too long ago, we were actually in Kakamega and we were hosted very well, and we managed to talk to the informal sector there at the markets about the importance of saving for retirement. So we have an outreach program that's targeting the informal sectors, and we have gone to the grassroots where we are meeting the mama mboga and telling them about the importance of saving for retirement. Ladies and gentlemen, the Tax Amendment Act was recently amended to incorporate, enacted, and it provided for an amendment to Section 38 of the Retirement Benefits Act. So members of retirement benefit schemes are now allowed to use a portion of their benefits to purchase a residential house. The amendment is very timely as it affords us an opportunity as members to own a scheme while still working and continuing to save for retirement. Once implemented, members will be able to have an opportunity to participate and contribute to the government agenda of affordable housing. The authority issued draft regulations. We got numerous comments from the public. We incorporated those to the draft regulations, which we have now presented to the Cabinet Secretary Treasury for consideration and finally gazettement so that they can become effective. Now, there are questions that have been asked about its success and whether it will have an impact on ultimate objective of a scheme of giving sufficient income at retirement. So the regulations have tried to balance between ensuring that we still remain committed to the ultimate objective of pension being available to members at retirement, but also affording members an opportunity to own a home during their working life. I cannot close my remarks without mentioning the status of the retirement benefit schemes that we are here today courtesy of. We are happy to report that the 3 schemes, namely LAP Trust, the DB scheme, the County Pension Fund, the DC scheme, and CPF individual scheme remain largely compliant with the provisions of the Act and the regulations. I think we have all seen from the various service providers' report that is true. We have an area where we are working with the trustees and the administrator, where LAP Trust DB scheme has exceeded the limit on property investments. But they have already submitted a remedial plan, which we are considering, and we will report back to them. Now, these schemes have also witnessed tremendous growth, and I will just mention a little bit, and especially this is good for people who did not know. Now, the DB scheme in 2001 had assets worth 3 billion. Today, we are reporting that it has grown to over 33 billion. Congratulations to the trustees. The County Pension Fund, a relatively new scheme enacted as a change in legislation or policy, had 324 million in 2014. It now has 13.8 billion. And the baby, the CPF individual scheme, which commenced operations in January 2014, had 71 million worth of assets at the end of that year, and now has grown to 2 billion. Remember, this is a voluntary scheme that any Kenyan can actually join and save for retirement. So we commend the sponsors of the scheme. We commend the members who make contributions to these schemes. We commend the trustees and the service providers who manage these schemes in their various roles in investment, administration, and ensuring safe custody of the scheme assets. Without you, we would not be celebrating this success. Unfortunately, despite the impressive growth, we continue to grapple with instances where a number of counties and water companies owe huge debt to these schemes. We have also noted a further decline in the funding level of the assets of the DB scheme from 80.4% in 2016 to now 78.3% in December 2018. This situation is worrying, and urgent action is needed to ensure that the schemes remain in healthy financial positions. We note that the trustees are continuing to engage with the defaulters and coming up with amicable plans to solve those, to resolve the matter and settle outstanding debts. The authority has further written to a number of these defaulters and noted action by some of the defaulters who have gone ahead and paid the debt. This is very commendable. For those with outstanding debt, we require that expeditious action is taken to address this matter, bearing in mind that there are penalties and they continue to accrue for late remittance. Again, Bwana Governor, we'll ask you to be our ambassador through the Council of Governors with your other governors for those who may have debt to try and settle that. Some of the debts mentioned arose prior to devolution and are attributable to the defunct local authorities. We are aware that discussions are ongoing to review and make arrangements for settlement of these debts. In the meantime, even as we discuss this, as these matters are deliberated upon, we believe that there is need for a fresh start for retirement benefit schemes arrangements for county governments. It is on this premise that following approval by Parliament, the county government retirement scheme was assented to on 18 September last year, creating the county government retirement benefit scheme. Subsequently, there have been several petitions filed in court challenging the new law and hampering its operationalization. The authority believes that this new is timely and affords counties a harmonized legal framework for management of pension for the county governments and its affiliates. In this regard, and as mentioned by the Cabinet Secretary Treasury in his budget statement, we recommend and urge that all work together to resolve this matter and ensure that county government employees have a scheme that safeguards members' pensions. In conclusion, this is a defining moment in our country's history. I believe that the overall success of the retirement benefits sector depends on our ability to work together, to be creative, to be innovative, and to provide solutions. The COVID pandemic has brought us challenges, but there are also very good lessons that we can learn from it. From the lessons learned, let us continue to collaborate for the ultimate success of the sector. As the Retirement Benefits Authority, we promise to always be there for you, to offer guidance wherever we are called upon, and to offer our regulatory support. Asanteni sana, God bless you, and keep safe.
Thank you very much, Caroline. Thank you, Caroline, on behalf of Retirement Benefit Authority. And thank you so much also for giving us, lighting a candle of hope. Again, after the pandemic, then we will bounce back to the same track that we were, even better. And thank you so much for also putting a lot of energy, and thanking also the CPF for compliance. Asante sana. Now, allow me, ladies and gentlemen, to humbly request Bwana MD to take his spot now to welcome our chief guest. Please, Bwana MD, karibu sana.
Yeah. Thank you very much, MC, and thank you, Caro, for those good report about our schemes. We know we live in very challenging environment. We have legacy issues with our former local authorities. I can assure you the county governments are really trying to change some of those things. They inherit a lot of problems, but we are sure that working together, we will get the solution to this debt problem. Now, before I ask the chief guest to stand and speak to us, I want to mention something which I had mentioned yesterday at KBC Studios. I did say that we have a special announcement to our pensioners at this difficult time of COVID. Our trustees, after looking at our financial position of Lab Trust and getting the advice of the actuary, have approved for our pensioners who are in active reception of pension, a small, modest increase, but it's coming at such a time when the COVID is here. It is something to be happy about. In other words, the trustees have approved that those members of our pension who are running pension from Lab Trust do get up to 3% increment on their pension. And I hope my good friend Ngoje, who is the chairman of County Pension Association, will be able to be happy for the first time. He has been on my case for some time. We have also done something which is unique. In other words, we have brought the lowest earning pensioner to a minimum of 5,000 Kenya shillings per month. So I'm happy to say that at least we are paying quite double what the government is giving on Inua Chami to our pensioners. And those ones who are earning the lowest amounts are actually those people who retired more than 30 years ago, when their salaries were very low. So really, it's something that these people are still alive. I wish one of our pensioners was actually alive, so we'll be able to tell you how happy they are with CPF and Lab Trust for taking good care of them, including those ones who are in the UK, Canada, and other places. Mr. Chief Guest, welcome finally. Okay. Thank you for coming. How can you forget everything from the top to the bottom?
Thank you very much, MD. All protocol observed, because I'm not aware of those people who are hooked in this meeting. I should be safe if I say all protocol observed. And on the onset, let me thank the MD here for inviting me and for making that the announcement of the increase of 3%, and of course the minimum payment of 5,000. That is actually commendable. So, ladies and gentlemen, distinguished delegates, it is a great pleasure and honor for me to join you all here today as we congratulate for the CPF scheme's annual general meeting. First, I would like to thank the CPF Group Managing Director and his able team for ensuring that this vital meeting has taken place virtually. In spite of the numerous challenges and hurdles that persist in our country and indeed the whole world today. Ladies and gentlemen, the leave no one behind agenda is a central promise of the 2030 Agenda of Sustainable Development and the SDGs, and should also guide response measure to COVID-19. In a region where roughly 8 out of 10 people are engaged in low-wage informal employment and often just making ends meet, the livelihoods, incomes, and well-being of many households and their human capital are at risk. With regard to the health dimension of the COVID-19 crisis, it has been established that older people, those with compromised immune system and underlying health condition, face a higher risk of severe infection. In addition to those who are medically vulnerable, as outlined above, other groups are especially vulnerable to the socio-economic impact of the pandemic. Across contexts, women are disproportionately responsible for unpaid and informal care work, and therefore social protection response must be sensitive to the gender burden of care arising from the COVID-19 pandemic. Beyond protecting people from occupational risks, securing their retirement, and cushioning members against the short and long-term economic and health impact of the pandemic, pension funds can be leveraged to adequately protect individuals, households, and businesses from the adverse social economic repercussions of the crisis. To this end, the Council of Governors is keen to engage stakeholders to put in place legislation and measures geared towards expanding coverage for our people to help cushion them during times such as these. Ladies and gentlemen, I wish to acknowledge that the industry has and continues to make great strides. This is best demonstrated by the fact that the industry's assets have exceeded the Kenya shillings 1 trillion mark, and coverage has surpassed the 20% of the labor force mark. Additionally, social protection programs in Kenya are among the most successful development initiatives in the country. Currently, social assistance programs, mainly in the form of cash transfers, are reaching more than 1.3 million needy households nationwide. The introduction and implementation of the Big Four agenda has complemented ongoing efforts to address poverty and vulnerable in the country. These are indeed commendable achievements, and I am also clarified to note that the industry has taken an active and important role in helping the government actualize its Big Four agenda. However, a lot of scope remains for further development, and it is worth noting that the Retirement Benefits Authority, RBA, under the auspices of the National Treasury, is actively involved in a number of exciting collaborative industry initiatives, such as working on the draft National Retirement Benefits Policy, whose objectives is to prepare an overarching policy on retirement benefits. The policy will seek to provide adequate, affordable, and sustainable retirement benefits to Kenyans through a robust pension scheme. This is a timely endeavor, given that effective social security policies can contribute to improving the environment for economic growth in Kenya. As the government seeks to support institutions to prosper and better the nation's economic standing, it is only fair that institutions support the government in achieving its set objectives. I wish to therefore thank CPF for not only supporting the Big Four agenda, but also the lead role they have taken in shaping the industry. I'm particularly impressed by the proposal put forth by CPF to ensure social protection for all Kenyans by way of mandatory pension contribution. This innovative approach to social security heralds a new dawn for our country and signals a gigantic step towards creating sustainable financing of social protection programs in Kenya. It is more so important to ensure that the crafting of the uniform social security policy is done through a collaborative and consultative multi-stakeholders approach in order to ensure that the concerns of all stakeholders are taken into consideration. Ladies and gentlemen, part of the pressures of globalization means that countries must begin to develop and facilitate development through pooling local investments, and one of the best vehicles for that is through pension funds. As a result of this realization and the growing size of the retirement benefit funds in developed countries, the discussions on public policy in the financial services must now include retirement benefits more prominently. I therefore urge the trustees and members of CPF schemes to consider more projects geared towards helping the government solve some of the existing problems, even as they make fair returns for the scheme members. In closing, I would like to point out that while we appreciate that we have to do much more to ensure our people are both covered and have access to social security, our approach to this must not only reflect best practices, but ought to embrace and harness at its core the spirit and culture of innovation. Only then shall we set ourselves apart and remain firmly on the road to prosperity. Most African countries, similar to other emerging economies, have adopted various social protection strategies and initiatives as one major way of addressing extreme poverty and the various risk factors that contribute to vulnerable and socio-economic exclusion of certain members of the society. Countries such as Lesotho, Zanzibar, South Africa, Namibia, Botswana, Rwanda and Mauritius, among others, have gone even further to establish universal social protection funds for their citizens. And there is a rapid rising trend in the adoption and uptake of social protection. I would therefore like to challenge all leaders as policymakers to think broader and deeper about the matter of social protection for our citizens. The solution to the problems that government faces in providing for the vulnerable in society lie with you, the industry and stakeholders. I can assure you that working together, we will generate, implement better ideas as we seek to bridge the gap between policy development and effective programs on the ground. The Council of Governors remain steadfast in supporting the schemes for the welfare of all members, both those in active employment and our STEAM's pensioners. Thank you. Mungu ambariki.
Thank you very much. Thank you. Let's appreciate His Excellency, the Chairperson. Thank you very much, Your Excellency. We appreciate the fact that today you've again give us the hope that after this we will come back to normal life. And thank you so much. Now, ladies and gentlemen, without much ado, we want to go straight. We have quite a number of trophies that we have there, and these are awards that we will just do a demo because we understand that we have quite a number. Others, I will read them here, but we will make sure also that each and every county, or rather each and every award, will reach its destination. So by value and virtue, you get to know the awards that will be awarded to the various groups or individuals or counties. We are now ready, and I want to request Dr. Julius Kingetich, please, to award the following counties. These are the awards for the most consistent in remitting current monthly contribution, Lab Trust DB schemes. And we have these counties. For the second runners-up, we have Kwale County. That is Kwale County. Let's give a round of applause, ladies and gentlemen, and we will have the trophy. It will be ready. Now, first runners-up, we have Uasin Gishu County. That is the City of Champions, Uasin Gishu County, county number 027. And then the winner and the first award goes to Nakuru County. That is the county of flamingos. And we will have Katana. Katana will receive the trophy. I believe we could do it, yeah? Daktari? Daktari will do it, yeah. Remember, he also comes from the City of Champions. He's an athlete, so he moves faster. Now, that is for Nakuru County. Round of applause, ladies and gentlemen. Thank you very much. Now, may I request His Excellency, our chief guest, Honorable Oparanya. These are the water companies and other associated sponsors. For the second runners-up, we have Kisumu Water and Sewerage Company. A round of applause. And then first runners-up, we have Nakuru Water and Sanitation Company at the same time. And the winner in this category, the water companies and other associated sponsors, we have Nairobi City Water and Sewerage Company. Nairobi City Water. This is, and then we have Mukami. You will receive these on behalf of Nairobi City Water and Sewerage Company. Thank you, Mukami. Congratulations. Piga makofi kabisa. Asante sana. All the counties are watching. Thank you, Your Excellency. Now, may I request our MD, Group CEO, please, to award for the most consistent in membership growth, DC scheme. We have attire in the second runners-up. We have Meru County, Ameru, and Kajiado County. That is county number 012, Meru County, and Kajiado County 034. Round of applause, ladies and gentlemen. Thank you. Then first runners-up, we have Samburu County, county number 025. Samburu County again. And the winner in this category, awards for the most consistent in membership growth in this scheme, we have Kakamega County. And we will have His Excellency, of course, because he's the president of this county. His Excellency, you will receive on behalf of your people from Kakamega. Now, I wish even the DJ would have given me some song from Kakamega because of a nice song. This is for the most consistent in membership growth in this scheme. Asante sana. Thank you very much. Asante sana. Thank you very much. Thank you, Bana MD. I think also we will do some presentation of awards later, but I will just really want to, if you allow me, Your Excellency, just to read through the counties and the schemes and the stakeholders that have contributed a lot in this, and those are the trophies over the other side. We have the awards for the most consistent in remitting current monthly contribution. Of course, that is what we've done already. And then we also have water companies. We have water companies from Bomet Water and Sanitation Company. We have Odaya Water and Sanitation Company. We have Ruiru Water Company at the same time. Most consistent in remitting current monthly contribution in IPP, individual pension plan. We have Kirinyaga County, and then we have Kisii County, and the winner in that category, we have Machakos County. Allow me again, Your Excellency, to read the awards for the most consistent in membership growth. That is what we've already done. And the water companies and other associated sponsors. We have Nyeri CPSB, we have Gadamadi Water Company, and Ruiru Juja Water Company. We have the awards for the special category. We have Gratuity, Council of Governors, NEPAD Kenya, and Water Services Providers Association, that is WASPA. And then we also have awards to the county assemblies. We'll do this very fast again. County Assembly Forum. Of course, the County Assembly Forum, you're here. We will pick our trophy. Bungoma County Assembly, Nyamira County Assembly, and Mombasa County Assembly. And at the same time, we have awards also for the sponsor of the year 2019. We have, again, Kakamega County Government. Your Excellency, Kakamega County Government, again, we will get to have the trophy. And ladies and gentlemen, I just wanted to save time on that because we still have the question and answer session that, and I think I'll request the MD, the group MD, you will go through this question. These are among the questions that we picked. And the questions are here already. We have Mugo Charles from Nairobi County Government, DB scheme. The question is, bearing in mind that we work until retirement, can CPF come up with a revolving fund to enable members borrow money at reasonable rates? And then he continues to say, also, we request that you do something to enlighten and educate to those retiring to avoid early deaths. Another question again, Charles Nyatika from Tana River County Government, DC scheme. The question is, one, why haven't I received my statements? That is one question. Secondly, I am very much aware that there has been wrangles between Lab Trust and Lab Fund. We will one by one. Now let me just finish this, and then I bet these are 3 questions. So I'm very much aware that there has been wrangles between Lab Trust and Lab Fund for a long period that we settled recently by the enactment of the county government retirement scheme. I have managed to go through the act, and I have noted that the act is a legal framework put in place to manage savings for pension with regard to employees in the county governments. With the enactment of this law, what is the way forward? Are our savings saved? How do you ensure smooth and seamless transfer to the new scheme? I think those are the questions you'll answer, Bana MD.
Yeah, thank you very much. Quickly, because we're running out of time. The first question was concerning members getting access to their pension or their savings for purposes of a revolving fund. We want to say that members, we do not want to take the job of banks and SACCOs and others, but this seems to have been a major pressure from you, because we keep getting this question all the time. We have decided to take up this question because, as we say, customer, when the chief guest, is king, and the customer is always right. So what we have decided to do is, because we don't want to breach the regulations of RBA, we have asked the board of CPF Financial Services to find a way in which it can maybe partner with some financial other institutions and offer those small loans to the members of our schemes, so that we don't. I think you have seen what is going on with Safaricom. We can innovate also. You know, Safaricom partnered with for M-Shwari and for KCB M-Pesa, and so Safaricom is able to get its customers to actually borrow through them from KCB or from NCBA. So we also see an opportunity here, because people, when they demand something, you have to consider. So we will be looking at that. Secondly, you know, the issue of Lab Fund and Lab Trust is no longer an issue much, because our parliament has already settled that matter by closing Lab Trusts and closing Lab Fund. The scheme which is going on for you members is County Pension Fund, and the sponsor is right here. You have heard the reports. The only challenge is that some of the provisions of the County Government Retirement Scheme Act have been a bit, interfere a bit with the benefits of our members, and for that, the courts have already stopped the implementation of that law to allow the issues to be brought forward and sorted. We believe that this can be sorted, and we are very much willing, as the Board of Trustees of all these schemes, in the quest of protecting our pensioners and all our members, that the right thing is done and the law is also followed. The Constitution must be followed to the letter in any law which is set. Otherwise, the law will be what you call it will be void. It cannot even apply because it is inconsistent with the Constitution. We are aware our members' benefits were sort of reduced, and the members have gone to court on that basis. I think this can be resolved between sponsors, the county governments, the National Treasury as a policy, and the members. So that we hope will be sorted. What was the other question, Bernard? I think that was one question at a time.
We have, I think, 2 more questions. I think we will have 2 more questions. Duncan Okello, that is on IPP, he starts by greeting us, of course, and then he asks a question. Now that the economy has been dragged down by this COVID-19 pandemic, what strategies have you put forward to ensure that members remit their contributions efficiently? And then finally, I think on questions, we have quite a number of questions, but Solomon Mogire, what is the future for CPF? Following that repeal of the Pension Act by Parliament, after the 5 years transition expires, will the monthly pension continue for the pensioners, it will be a lump sum for everyone? Those are the questions.
Thank you very much. I think I've already answered that question in terms of, I think Lab Trust has been here for 90 years plus. The Lab Trust members, it's a closed scheme. We believe that the trust deed, which is a solemn promise by the sponsors, requires that this scheme runs until all members have been taken care of, including their beneficiaries. I believe we shall be able to push the Parliament and the National Treasury to ensure that they don't interfere with this whole pension scheme, because we have even pensioners outside Kenya, and we don't want them to have any challenges. As to the issue of the future of CPF, I think all of you can see that CPF's future is bright. Do I have to say? Yes. We believe we have convinced Kenyans that CPF, County Pension Fund, belongs to county governments, and with the support of the county governments, really, and the members, and even everybody can see. We remember last year, in the last AGM, the CEO of RBA personally handed over the certificate of registration to the Council of Governors. So we really, CPF's future is actually very bright. And God is with CPF. Asanteni sana. Maybe the last one, I saw some question there about statement. A member from Garissa has asked, how does he get his statement? And we say, we have a process. We have a process in our system which enables members to log in and actually get live statements online. So we will encourage our members to know that because of COVID, they should not visit our offices. They should just log in and get the statements live. It is available anytime. It's no longer the one we are normally supposed to be given once a year. You can actually download it immediately anytime. And we want to thank the government of Kenya for facilitating wide technology coverage in this country. Yes. Maliza? Asante sana.
Thank you. Let's give a round of applause to the MD for answering the few questions. I know there are quite a number of questions, but still, they will be answered accordingly. And I believe that we will also use the channels to answer each and every question. Finally, ladies and gentlemen, I want to welcome now on stage our Lab Trust trustee, John Oscar Juma, for the vote of thanks as we come to the conclusion of this AGM meeting. Welcome.
Thank you very much. Our chief guest, Governor Oparanya, Chair of the Council of Governors and Governor Kakamega County, the Chairman of the Lab Trust, Engineer Dr. George Kwedo, the Chairman of the CPF Financial Services, my brother Kipngetich, GMD CEO, Mr. Kili, the regulator represented by Caroline today, all our service providers, distinguished guests, ladies and gentlemen, hamjambo. Maybe before I pass a vote of thanks, let me just communicate something from the GMD. To those of us, our members out there and those attending the AGM and who have sent questions that we may not have answered, we shall endeavor to answer those questions through the media you used to raise the questions, so don't worry, just communicate, get in touch with the media or the emails or the platforms that you used, and your answers will be there. Now, my task is to pass a vote of thanks, and may I start by thanking Governor Oparanya, Your Excellency. We are aware, of course, through the social media that today you have attended very many functions before you came here. So we want to appreciate that you created time to come to grace this occasion. And besides that, we are also very grateful to the support you have given this group. We know that I think we have received I dare say, the most valuable support from the counties during your chairmanship. Asante sana. Chairman, CPF Financial Services, my brother Kipngetich, asante sana. The work that you do at that office and the running that you do of these schemes is very much appreciated, and we want to assure you that the relationship we have with the group is bound to grow even greater. Thank you very much, Daktari. The regulator, Caro, pass our regards to the CEO. You know that at CPF we have very innovative people. We are aware that sometimes Mr. Kili does some acrobatics which the regulator doesn't like. You know, this industry pension is also perhaps one of the most regulated. But we are happy that whenever we have those issues, we are able to sit with you very comfortably and come to a solution. We want to assure you that even the areas you flagged out, the overweight on the property at Lab Trust, we are engaging very well, and I'm sure that even that will find a solution. To our stakeholders, WASPA, through Chairman Mangeli and CEO Ambugo, CAF, chaired by my good friend and classmate Ndego Ahome, Kenya County Government Workers Union, Secretary Robert Duba and your team, Mzee Ezra Ngoje at County Pensioners Association, and all the others that I may not mention. We want to thank you very much for attending wherever you are and for the support that you give to this team. Thank you. Now, my chairman at Lab Trust, Engineer Dr. Kwedo, and my colleague trustees, including corporate trustee, Natbank, we want to thank you very much for all the work and effort you are putting in to run these schemes. That is very much appreciated. Now, the administrator, the entire team, led again by GMD and the CEO and the team, we very much appreciate the work you have done. When you presented this group, especially to us at Lab Trust, the plan to have this meeting virtually, as trustees, we were a bit worried, but I'm happy that what I've seen is good. This is a new thing that I think should be rolled out to all the other schemes and pension players. And as we said, a saving of half what it costs to run these AGMs, I think is something to write home about. So thank you very much, the administrator and the entire team, for that work. I've already thanked the service providers, be they the auditors, the actuary, the fund managers, investment managers, custodians. Thank you very much. I think your reports speak volumes about what you are doing, and as trustees and the entire team, we are indebted and forever grateful, and we urge you to keep up the good work. Of course, this cannot be over without us thanking our thousands of members in all the schemes out there attending this meeting virtually. Without you, of course, we wouldn't be here, and we want to thank you together with all the sponsors for being a part of this group. Now, the Fourth Estate, KBC, our national broadcaster, thank you very much for making this possible, and the various other platforms on which we have been able to run. Of course, with the able cooperation with our communication team, thank you very much. I think you have set a fast, and I'm sure the rest of the other schemes who are still wondering whether it's possible to have this happen are now sure that this can happen. Thank you very much. Finally, may I take this opportunity to thank Your Excellency, the MC. We always enjoy sessions moderated by yourself. May God give you life, that next year you will do another one like this, perhaps in better circumstances than this, when we are able to laugh as we always do. Let me thank the Almighty God, of course, for enabling us to be here, for giving us the gift of life, for allowing us to be alive and to breathe and even to do this despite the challenges of COVID. I think the challenges are there, and like my other speakers have said, the opportunities are also there in their very large numbers. Let's seize on those opportunities, and above all, please keep safe, stay alive, and God bless you. Thank you very much.
Thank you. That is JOJ, John Oscar Juma. We want to thank you, John, for also thanking us and thanking everyone, because many times we forget to thank you since you've thanked us. We want to appreciate, thank you, KBC, for the Channel 1. Thank you again, and I think now we will hand over the feed back to your studio. Thank you for staying with us all the time round, and thank you for allowing us also to channel our AGM meeting through you. I want to, first of all, announce now some few announcements as we hand over the feed back to the studio. I want to make an announcement that in a few minutes we'll be having a photo session around here with our chief guest, and of course observe the social distance. So we will have a few people. We'll have the first photo session at the end there. We will have a chief guest and chairperson and MD, group MD, the three of you, please. May you rise? Your Excellency, please. We will have, so you can guide us there. Very good. Then we can have the chairperson on the other side and the MD on this side. Very good. Now, chief guest feel at home because this is CPF. We are happy. And then our chief guest will also remain there, and then we will have the fund managers. Fund managers, please, fund managers, can you take a photo with our chief guest? Fund managers, and then we will also have custodians. Custodian, please, you'll not be left behind. Custodians, yes. Fund managers, where are the fund managers? Correct. This photo will go down history the next 100 years or so, because we can allow you to remove your mask temporarily so that we can have correct. Madam Caroline, can also RBA.